Hello, hello. Good morning, good morning. All right. I'm looking for a gold sell right now because price is coming down quite heavy. Oh, man. Gotta set that chat up later. Let's see. Stop here. Oh, don't know if I'll be able to catch it. Will I be able to catch it? I think I will wait for... Alright, let me see. Yeah, I think I'm gonna wait. What are we trading at? 0.79 right now. Yeah, I think I'm gonna wait a little bit longer. I'm gonna wait for a few more bullish candlesticks to first close, and then look at executing. And then I'm gonna take a trade over here. Yeah, but we are back, guys. We are back. Yeah, let's see. Let's see if we can get a bullish candlestick closure first. Hope everybody's doing well. Good morning, Luke. Morning, Ricardo. So I get the chat stream up here. Come on, if you... Yep, perfect. Like, just get a bullish candlestick closure like this. And then with the London open, I would be expecting price to continue to move down bearish. Yeah, gold is down 0.77 right now. 0.77%. See if we can get some sell continuations. Yeah, I'm still adjusting. Got a new setup here. Still adjusting, making sure that we are good to go for the week. It's going to be like a market phase. You see on the 5-minute, we created like a support. Just got the London session open up here. All right, guys. So I just got triggered in my sells. Holy! Stop loss to break even here. Stop loss to break even. Stops to break even. Come on now. Oh, damn it. Man. Was looking. That was a nice start on the push. Tap me at BE. So I think it's because it's like there's no my broker has a top wick actually. I got a small baby top wick on that. Man, that was such a good push. Thought we would just continue melting off here. Did a bit like 19. Zero drawdown. Come on, man. And there's so much room to move down. That's the thing. It's like we got a consolidation break here with some clean range on the 5. So much room to keep moving down bearish. Okay, let me see. Boom, boom, boom. Start this here. So you got Kraken in the chat. Got Woods in here. Let's go, Brian. Yeah, so let's see what happens. Maybe it's just gonna take some time before it starts moving down. Audio sounding super crisp. Nice, nice. Yeah, that was a fast trade. I mean, I kind of really wanted this thing to play out here because on the 5 minute and everything, we have really solid confirmations right over here. See, price out and reject. Boom, boom. Got a few rejection wicks right over here. And then we got like a false support, which was created. So the idea was, after creating a support like this with the bearish trend, that, you know, price is going to fade these buyers out. The start was good. The start was pretty good start on that move, actually. But yeah, I think that's what it is, man. Like, sometimes when you get like these kind of aggressive moves, they also have aggressive pullbacks. You see, now that's looking more like liquidity grab right there. Now it's starting to look like a liquidity grab right here, taking out these lows. I need to fix my chat right now. I can't see the chat. Just give me a second. Can't see the chat. Where's that phone? Here it is. Holy. Let's get the chat up. How's everybody doing? Close just because this account I can't go over 1,500. Do I need a VPN? And so now Goldie's deciding to pull up. That looks like that was the last push. So it was trying I think what was going on here was it was trying to break above this area over here. But you see, it rejected so many times. 1, 2, 3, 4, 5, 6 rejection wicks. So it needed liquidity. So this to me just now looks like a liquidity grab so that it could break above this resistance. Any psychological marks here? Not really. 4017, 4017. Alright, cool. Alright, guys. So warm up, new setup, change of scenery. Let's get back into the swing of things here. Let's get back into the swing of things. Not easy trading with distractions. Man, I can tell you, well, when you got distractions in your personal life, your trading life is gonna take a hit as well. You see, not been so consistent this month. But how many weeks we got left? Got this week, we got next week. Yeah, we're gonna see what happens here. You know, as long as there's volume, as long as price is moving. That's all my days. Man, what a pullback that is now. What a pullback. How much was this? Like from here to here, about like 129. Bang, bang. That was a great choice to go B. Yeah, for sure. We don't like being in the market for too long because, you know, like, if you're going to be in the market for long, this is what usually happens, right? This is what usually happens. You're going to get faked out. So I think it's quite important to always like keep in mind how the trade is playing out. You know, you got to look at how the trade is progressing. Because, you know, on a break like this, guess how quick that break was? Usually like on a break like that, you can typically expect some kind of a pullbacks, like very strong pullbacks. Like I've seen this happen before. So if anything, we would like it to we would like it to break fast, but not like super aggressively. Like a clean break, but not super aggressively. It's a very nuanced thing. I don't know how to explain it. It literally is a matter of maybe milliseconds or seconds. Probably like maybe a second or milliseconds. There's a way that price behaves when a... This is not my first time actually. I've seen this happen before quite a few times where it's like breaks aggressively and then like aggressively pulls back up again. So then like, you know what? When you go through the journey of trading, you're going to have a lot of these things happen to you, let's say in your first year, right? They typically say first year is for mistakes, second year is for refinement. So in your first year, you're just going to gather that information. And then in your second year, you're going to be like, oh, I remember this. I remember something similar like this happened. Then you get better. Then you get better. But nice to be back. Chat, nice to be back. Nice to see y'all here. Nice to see y'all here. Brand new beginnings. Let's go. Sellers here being absorbed on the bottom. Yeah, but how's it been, chat? How's it been? How's it been? How's the market been? I haven't looked at the charts since Friday's stream. Oh, it's Tuesday. Yeah, since Friday's stream. I haven't looked at the charts. So we're gonna do some higher time frame analysis right now. We're gonna see what's currently going on in gold. Macro fundamentally, no idea what's happening with the pair right now. So we're gonna dive into that too. See what Mr. Trump is talking about. But nice to be back, guys. Mr. London streams. Yeah, Mr. London stream. But I think London's been good. Like even yesterday, I mean last week, London was amazing. But you know, we had a lot of distractions last week. So we couldn't hit London like we typically like to hit it, you know? So yeah, let's see. Consistency is the key in this game. If you don't show up to the charts when you're meant to show up, then, you know, then you miss out on opportunity. Oh, Lee! Daily's coming down. 1, 2, 3. Fourth daily candlestick in a row bearish. Damn. Okay. All right. Let me see what's going on here. Just give me 1 second. All right. Let's see. What are we trading at? $4,000. So we just hit 4,000 psychological mark. Let's move previous analysis over there. Coming down towards support here by 39.76. Man, perfect reaction too off that 4,000 mark. Dollar must be gaining in strength then at this point. Let's see fundamentals. NFP on Thursday this week. Oh yeah, we should be getting non-farm payroll data this week. True. Or it's not scheduled though. Unemployment claims. We got unemployment claims Thursday. Oh, non-farm employment change. Here we go. The NFP. So we're getting the NFP results on Thursday. All right, Wednesday we got FOMC meeting minutes. Damn, it's a pretty important week here. We're already getting the NFP. Even on a Thursday, not even a Friday. We got flash manufacturing, flash services. Okay. Oh, why this company is calling me now? Trying to open up these feeds over here. Why are they not opening? Are the trading view buttons like broken or something? The stuff's not opening here. Oh, maybe I need to use a VPN or something. Oh, here we go. Wow. Okay. So let's see. Gold down for the 4th day on firm dollar, easing Fed rate cut bets. Let's see what the Fed rate cut bets are currently at. See Jay in the chat. Good morning. Good morning. Jay Bengo. All right, so we got easing down to about 46.4%. Yeah, this is the main culprit here. This is the main culprit. That why price is moving down now. See, gold fell for a 4th straight session on Tuesday, weighed down by a firm dollar and diminished prospects of a US interest rate cut next month. The dollar has been a bit stronger today, and also some of the speculative length has been reduced this past week. The gold market is going to consolidate for now, said Marek's analyst. Yeah, it's gonna consolidate. It's actually in a consolidation. If you look at the gold market, it's in a very big consolidation right now. But since the range is so big, we can catch moves in between. See, Fed Vice Chair Philip Jefferson said on Monday the U.S. Central Bank needed to proceed slowly with further rate cuts, denting expectations for a decrease next month. See, focus this week will be on U.S. data release, including the September non-farm payrolls on Thursday, for clues on the health of the world's largest economy. Expectations the Fed will cut again next month dropped to 42% overnight from a high of almost 100% soon after September decision. This has been weighed on investor appetite for gold. Nonetheless, structural tailwinds such as geopolitical uncertainty, concerns about U.S. debt stability, sustainability, de-dollarization trends, and central bank buy-in are expected to support investment demand in the medium and long term. I mean, like, dollar is a... I don't know, let's look at the DXY. Let's see what's going on with the dollar index. What's going on with you? All right, let's go on the monthly time frame. It's doing that little consolidation reversal play here. It would be insane to see TFX concepts off the monthly right now play out on the dollar, because now that the idea behind the dollar is if you look at the way it's broken below this larger time frame support area over here, we already know the dollar is weakening, right? Reason why gold has been moving up bullish. But right now we're seeing kind of like an opposite. Now we're seeing gold kind of weaken a bit, and the dollar is trying to, like, for me, it looks more like an artificial hold. There's like an artificial hold on the dollar, but this thing could actually have a really nice comeback back into the range. If you see a monthly candle do this right here, that's going to essentially be your consolidation. Boom, boom, reversal. And if it breaks above, I think it's this high right here, or these highs. Actually, it could be like this high. This high right here, we may see price continue pushing up. So basically, that's like a warning sign, right? So that's a warning sign we usually talk about. So it's already giving these sellers a warning sign that a dollar might be going up. We might see dollar strength soon. Dollar strength, might see gold continue following to the downside. But a Goldman Sachs forecasts a $5,000 by 2026. So overall, we should still be moving up bullish. But we're definitely at a 4,000 psychological mark right now. That NFP is going to be heavy. Oh, yes. Man, that NFP is going to be... It's going to be fireworks for NFP. I'm just going to, as always, grab my popcorns over there. I'm going to grab my popcorn and then just watch the NFP. You know, just watch people going to blow their accounts. Maybe make money. Just trade like the breaks. Just trade the breaks. 5,000 in a month? No, 5,000 in 2026. We kind of thought like gold could create some all-time highs, didn't we? Because, you know, price was already breaking above some kind of a resistance over here. We're breaking resistance to continue to fill this range. See, we pushed up how many pips here? Like about 829. Still got room to go. We still had about like 1,000 pips over there. But I faked out. Broke above resistance. Small little shotgun play on this. Off the daily time frame. Candlestick close above resistance right there. Rebreak of the highs. Pushed up nicely. And then kind of like tumbled down again. Tumbled down to 4,000. But I would still say the day is still bearish, chat. Like, I think the reason for why we're getting like really strong pullbacks may be due to the fact that we have hit the psychological mark of $4,000 here. It's an institutional level right over here of $4,000. So I think that's the reason why you're seeing more of a probability of a stronger pullback there too. As opposed to like if we got our setup, let's say like somewhere around here and we hadn't hit 4K yet, that would be a beautiful magnet. As y'all already know, these numbers here are like magnets, correct? Like you're going to see it happen over and over and over again. So for right now, I think what it is 4,000. Might even set up another entry over here. But tap right into 4K. Got a small little V-shaped reversal right over here too. See, it's in like some kind of an accumulation. Accumulation here. V-shaped reversal to the downside, hitting 4K. And this is the accumulation I was telling you about on the daily time frame. So it's just from up here by the all-time highs, obviously, and down below here. You can remove these other zones. So you can see the market is neither moving bullish, no bearish in this larger time frame perspective. Right? Just kind of hovering around this area. So we're not in a bull trending. We're not in a trending market like this. You see huge difference in market conditions when you're looking at some like this and some like this. Because right now we're trading what we call the trenches here. Trading the trenches. So get ready for days where we're going to see like bullish candles, days we're going to see bearish candles. Like right now we're seeing bearish candles. Maybe next week we might be seeing bullish candles if, you know, maybe price continues to move down like this. But that's not necessarily indicative of where we think gold is going to be going until we actually start breaking some key levels. I think like if we get below like 3,900, for example, 3,900 is a pretty important zone over here. So if you break 3,900, man, I think we're going to see like a deeper pullback there from this bull run, this previous bull run that we had, right? And then that's the all-time highs. So yep, this is a trench. This is a trench, and I think it's a pretty good trench to be in. As far as trenches go, this is a nice trench. You know, like a veteran soldier will say, yeah, I think as far as trenches go, this is a nice trench. In all the trenches that they've been in. Not all trenches are the same. Some have different strategical value. So I think, you know, this is a pretty good one here. Don't marry that bias. Be ready for both. Yes, I want to see 25, 40, 50, then short. I'm not even... like, for now, I would see, like, gold is going to move more down than bullish, to be honest, because we're still pushing down. Like, this is literally the first... Let me see, since our Asia session. Yeah, I mean, like, this is literally the first time that we've hit, like, a key mark. Price is pulling up. It's created a new high, because even if you look at this, from this perspective, you didn't even, like, break above these highs. Right, so this is the first time we actually did something a little bit more strength after hitting 4K and then breaking above these highs right here. See, since the Asia session, we've just been creating new lower lows, lower highs, lower high, down to 4K, and then boom. Pretty strong area here this is. Because before 4K, once the Asia session opened, where were we at? Nothing too important. It's like 40-50. 40-50, next psychological mark, 4K. We hit 4K, targets met. Now it's starting to create new significant highs right over here. So we could start to see pullbacks, but this is the inception. So yeah, for now, I would still be looking for sells until maybe, you know, like a pre-London time, a pre-New York time, where like the market direction just naturally shifts. Wow, yesterday's NY session was crazy. Got the NY open and just completely dumped. Anybody catch any of this? That's really nice over there. You caught it? Oh, nice. Ricardo here caught a dub. Insane. I don't know why I pushed so hard though. So we can look at some more newspapers here. Gold extends falls on firm dollar, easing Fed rate cut bets. Gold fell for fourth straight session on Tuesday, weighed down by a firm dollar and diminished perspective of US interest rate cut next month. Oh, damn. It's already like December next month. Holy. This year has gone by so fast. It's already December next month, guys. It's December. So we got to reflect. We got to reflect on our trading this year because, you know, time goes pretty fast. Y'all have experienced like a whole market cycle. So if this is your first market cycle, you have to look back at this year and see where have your strengths been and where have your weaknesses been, because you only want to get better. You don't want to be taking your bad habits into the end of the year, you know, like what is it right now? It's the 18th. You don't want to be taking your bad habits into the end of the year. Like this is the last sprint right now for you to really iron out all those over trading, all those like times that, you know, you take trades that are against your rules. This is the time, because you want to start next year on a strong foot. Don't wait for next year to start. Start right now. Start right now. Let other people wait for next year, but you got to start right now. You got to be ready already for the next year, so you don't have time to waste, right? You really don't want to be doing bad habits into the new year. So yeah, let's get it, guys. I think so far, from what I've seen, at least in the exclusive, in the community, in the Discord, people showing really good trading progress. So, you know, I think, you know, that's really nice, and that's why we have a community in the first place, is to build people's discipline. Because, you know, a lot of the time people say, man, how can I be disciplined? You know, how can I be disciplined? But there's no secret sauce to being disciplined. What it is just accountability. It's just knowing if you're not going to do it, no one's going to do it for you. So when you're part of like a community, sometimes, you know, that can help with accountability. There are some sort of Xauusd, I think they're called, where people who are really bad at saving money, they're going to join these Xauusd, I think they're called. And the idea is like every month, since they're part of a community, they can like put money into like I think it's like a pot. You can imagine like a pot of money, and everybody is being kind of motivated to build a good discipline around saving, because they know if they are doing it themselves, it's going to be a lot harder for them to be disciplined. So you just got to look at your own character and say, am I a guy who needs a community? Do I like working with others? Look back at your days in school, right? Did you like to work with other people to get things done? Like, you like go to library and study with other people? Or were you the kind of like loner owl who like to do it themselves? You know, you could study yourself, you like to get things done yourself. So you got to look at your personality, see what you are, and then really lock into that. You know, really lean into that. For me personally, I'm more of a lone owl. So I really leaned into spending a lot of the free time I had to focus on the charts, you know, just to focus on trading, like heavily, because you're more locked in. For me personally, I think when you're alone, you have more time to lock in, as opposed to like if you're waiting for somebody. But in either case, it's always good to see what other people's ideas are, how other people trade. You see, like Ricardo over here gave me some really good ideas the other day about waiting for 1 minute candlestick closures. I think this is it right here. 1 minute closure and then break of the lows to continue moving down. Pretty valuable insights. Always going to improve your edge. There's nothing in this community that's not going to make you into a better trader. I can 100% say that. But let me see what happened with our trade. Even if you look at the trade over here, if you waited for your candlestick to close, you would not have been triggered. You see this? So this is a break. So I like to take it on breaks. If you waited, you would not have been triggered. So, you know, I think that's pretty good. There's definitely a edge over there that I'm seeing to waiting for those closes. You see right here as well. Look at this, Ricardo style. If you took a sell over here, you would not have been triggered because you're waiting for a candle to close. And you know, that's the power of a community, chat. That's the power of a community. You share ideas, and all of a sudden you're finding a diamond in the rough. You're finding a diamond in the rough. You don't have to find many diamonds, right? You just got to find a couple. A couple small little tricks like that can really go a long way in your trading career. Small little tricks. How much does this actually pull up? Break of the lows, boom, boom, pulled up about like 20. That's struggling. I think it's because we hit that 4K mark. We may be seeing some kind of pullbacks. M15 in 2 minutes. Oh, we got a new 30 open. What would be a good rule to stop for the day? 50K challenge. I think if you're going to take like 2 trades a day, I think it's pretty nice. You're going to call it a day there. I'm taking 1 trade today because I'm just getting back into the swing of things. Gotta look for another trade later, possibly. And then, you know, gonna call it a day. What else you gotta do? You know, you don't get paid to trade. You get paid to wait. Trading is not like a 9 to 5. You know, 9 to 5, you gotta put in work, but in trading, you gotta do less work. You got to do less work in trading. See, consolidation breakout 1 minute, shotgun 5 minute. It's a really clean little liquidity grab below here too. Oh, it has like an inverted head and shoulders play. It's not perfect, but I mean, it's there. It's definitely there. I can see it. Boom, boom, boom. Then it's all a matter of like risk appetite, you know. For you, does that seem like a good trade? Yeah, but it's definitely there. It's not the cleaner. It could definitely be a lot cleaner. We're gonna run a simulation this weekend. We're gonna do a free simulation too. We're gonna do a free simulation on YouTube. Yeah, look at this accumulating over here. I think it might just be moving up. Let's see what happens. 2 trades no matter what. If it were win or losses, I think if it's your first trade was a losing trade and you couldn't manage your risk, then you're going to take your next trade. You see, that's why I'm super big on managing risk. You know, because look at what I've done over here essentially today. I've turned like a possible losing trade. I could have lost like maybe like about 1%. I could have lost 1% on this trade. And then for the next trade, it will be a lot harder for me to make that back, that 1%. But look at what I've done. I'm in a position now where if I'm going to take my next trade, it doesn't matter, because if it's a winning trade, awesome. If it's a losing trade, at least I manage my risk. So I'm very big on managing risk. So when a trade goes against me, I'm always looking to see how can I, you know, put my stop loss to break even? How can I close partials or close a position? Yeah, I think it's quite important this. Because you see, your good trades, as I always say, don't give you a hard time. At least for me, at least. Depends on your strategy. But for me, my good trades, they never give me a hard time. They're just gonna move like this. You see this? They're just gonna move. Small little retest over here. Okay, whatever. Then just keep moving. Holy man, look at the size of this candle here. 1,100 pips. 1,100. Damn, Goldie. This is a 5-minute candlestick. Not 1,100. Sorry, my bad. 116 pips. 116 pips. We got a nice little 8 SMA right here too. Kiss of death, as you can see. See that volume indication right here? That's our volume awareness tool. Let me see if we got anything for a... Do we have anything for the sell here? Yeah, we had a small kiss of death, I think, right here too. Boom. Let's see this. Right above that candle. And then boom. There it was. Yeah, that was a kiss of death. Y'all see it? Look at this. See how the candle, the SMA, this is 8 SMA, right above the candlesticks. Couldn't even create a top wick. Look at that. Boom. Volume indication. So that's just like, you know, confluence. Very nice. Very nice confluence. But you see with the London Open, this is the thing about the London Open. Sometimes they're like you get these London Open fake outs like this. Boom, boom. And then price goes in the other direction. So you always got to be a bit cautious about those London Opens. Right? London Opens, New York session opens, market opens in general. Holy!
Why are you running? Why are you running?
Why are you running? Man, you see, this is what I'm talking about. Like, when you're going to take a trade, it's not supposed to give you a hard time. You see this? Look at this. Look at this. Even with a 16 pip stop loss, you know, if you're just scalping, up already 1 to 6. You know, I think this is why it's important to have, like, when you're going to go and join TFX, you have to go through the WAP database. If you don't go through the WAP database, it just looks like I'm calling it out in hindsight. So you have to go through the WAP database. But I think you all already know, chat here is pretty smart. I think you all already know what it is. Yeah, you see this? Look at this. Zero drawdown. Zero drawdown. Come on now, stop playing with me. You know, for me, trading is not always about winning, right? It's not always about winning because there's a random distribution of wins and losses in the market. So for me, it's not always about being perfect. It's just about, can I see my concepts play out? And can I also just be consistent enough to have that a result as well at the end of the month? Right? Because, you know, if you're going to have like a strategy and you're also, when you're losing and when you're not trading, you're still seeing it lose or not seeing it perform quite nicely or as you expected it to, that's like taking an L twice, right? Because now you're trading a strategy where even when you're not taking the trade, you're not seeing the results that you would want to see. But you kind of want to see a strategy perform well, even when you're not trading, because you're only going to take like 2 trades a day. All right. So you just want to know that it's a solid confirmation. That's it. And then just make sure you're consistently hitting it. Because, you know, like in trading, man, if you don't show up to the chart, like if you're just, consistency is the name of the game, right? You just have to be as consistent as possible. If you're not showing up to the chart, if you are having a lot of distractions, you're trading with a lot of distractions, man, like all of this is just going to affect everything. even if you look at the way my November is going here, I'm only up like maybe 4%, right? But it's because I had lots of distractions. I can't lock in. So you need to have a system which is easy to follow. You need to set yourself a time in the day, maybe like, 1 or 2 hours, preferably like minimum 2 hours. But it depends on your strategy as well. It really depends on your strategy. If you're trading TFX concepts, each hourly candlestick will give you at least 1 to 2 trades. At least 1 to 2 trades. So you got to set aside 1 to 2 hours a day where you can just lock into a simple strategy. And here the key word is simple. If it's not simple, then it's going to be harder for you to follow, especially in your days where you're performing at your least optimal. Let's say you didn't get enough sleep, or something's going on, then you're not going to follow a checklist which has like 10 checkboxes before you get into a trade. So you're going to need like something a bit more simple, a bit more stress-free. And I think that's where you really find your consistency. It's in simplicity. It's not overcomplications, not looking at necessarily all the time CTO data and all of these other additional things. It's not the case. Because look at this, man. Like to catch a trade like this, did you need to look at anything too crazy? No, we have our entry model. You choose your direction. Where do you think price has a good direction of going? But in this case, the market is honest, right? For the most part, the market, it shouldn't break the lows. But you see, in this case, it actually did. But it shouldn't break the lows if it doesn't want to continue going down. I think this was like another small liquidity grab. And I think that's currently what's happening here too. You got one small one here, one small one here. You even got another accumulation that happened right here. So you got entry 2 and you got entry 1 right over here. Beautiful SMA. Beautiful SMA. Look at the way we're trading above SMAs. Now, here's what I want you to understand. The market is going to pick a direction. It's either going to move up or it's going to move down. So as you can see right now, the market is picked a direction to move up because we're moving down since Asia session. Since Asia all the way down to $4,000, we pulled back up. London open, one last move it gave, one last entry for a sell. Gave a decent push. It gave you enough time to get out of break even. It gave you those 20 pips and then it pulled back upwards. So I was like, the last move with the London open, it's changed direction now. So when you're going to think about the market, you can just think about it in that simple terms. That it doesn't care about your fair value gap. It doesn't care necessarily about much. Think of it as just like a beast moving as it pleases. Like if it wants to move down, it's going to move down. It doesn't matter if you got a AAA setup or anything like that. If it wants to move down, it's going to move down. So whenever you're going to take a trade and you're going to take like a really good AAA setup and it doesn't play out, you can just think about the fact that the market doesn't really know it's a AAA setup, right? It's just moving. But you want to be executing that AAA setup as consistent as you can, because if you keep doing that, you're going to come out on top. It's even the same way as counting cards, like when people are going to count cards in the casino, they're going to have losing hands as well. Even when you're counting cards, you're still going to have losing hands, right? It's part of the game. You're going to lose, you're going to win some, make some back. So think about it that way. Like losses are inevitable, but as you're counting cards, in the long run that you're going to beat the casino. You're going to beat the system. So trading is the same way. It's kind of like you got your strategy. Your strategy is essentially like counting cards, right? But you're going to beat the casino in the long term, correct? So just keep executing on it. And I think when you got like a little bit more experience in reading price action, then you start to take things less personally, because a lot of the time we're like really quick to take things personal. I've realized each time I am having friction with my GF, I end up losing trades. It hasn't happened much, but it happened. Most time when me and her are happy, I'm having winning streaks. Hey, happy wife, happy life, eh? Happy wife, happy life. See, daily is now switched to waiting. We are currently waiting. We've come all the way from -1%. I think this daily here tapped -1%. Let's see how much we do. Negative 1.16%. All the way back up to 0.15, man. Crazy. I need to work on patience, Vic. Got any tips? Tune into the stream. You know, take notes. I think that's it. That's the best. Because patience only comes from also if you know exactly what it is you're looking for, it's easier to be patient, right? So you ask yourself the question then, do you know what it is that you're looking for? Do you actually know what it is that you're looking for? Do you think you kind of know what it is that you're looking for? Because, you know, it's a big difference, you know, like when the market shows you, you know, the thing is, here's the thing. When you come onto the chart, it's like the market is going to try and push you into a trade, you know, because it knows a lot of people struggle with patience. So it's going to try and push you into trade. And if you really want to take a trade, your eyes are going to force the setup. You're going to feel like the setup is actually there, but in reality, there might not even be a setup. So the market is really good at making you impatient in that sense. So you just have to take a step back. Always take a step back. Always take a step back. Even sometimes I recommend for traders, if you're going to get into a trade, wait like 20 seconds before, like maybe like 20 seconds, or just wait a minute or something before you get into your trade, right? And just see how it's playing out, how it's behaving, because yeah, patience, everything. Like you got to wait for the trades to come to you, because you're kind of like, you're a magnet and the market needs to come to you. So don't go to the market, let the market come to you. That's the best advice I'll give you. And you know, that's kind of advice that a lot of like really good investors will give you as well, is don't chase the market. It's never worked out great for people chasing the market, but it's worked out most times. If you look at your trades, your best trades are always the trades which came to you, correct? The stress-free trade, like trades kind of like what we just saw here as well on gold, like beautiful structure. Like this would have been a really nice structure for, let's say if it didn't even break there yet and it pulled up and then the next candlestick came back down like this and then started to break the lows. That would be such a clean, easy structure to execute on, right? As opposed to the one that we took here. The one we took here was, it's a good one. It's a pretty good one, but it's not the cleanest. You know, it's there, but it's not the cleanest. It could definitely look a lot more stress-free, a lot more simple. So it's like, once you know what you're looking for, then patience is going to be natural. Patience is a virtue. It's just going to be very, very natural for you to be patient. Mental stability is key for TFX concepts. Yeah, for trading, for yeah, trading in general. You want to be mentally stable. Because if you're not, then what happens is a lot of the traders who are not mentally stable, man, I've seen them crash out so bad. So bad. I don't even want to mention any names, but holy, that concoction of not being mentally stable and trading, it doesn't mix. If you're too emotional, you know, if you're too emotional, it's not a good thing. It's not a good thing. But you know, the good thing is, even though you are like that, you can always make it back because you have a skill, right? Because I've seen really good traders who are able to make money, lose that money. But then they kind of like have a dip and they start to make it back up again because they get the skill. It's just, you know, they just had like a relapse. A relapse. So you gotta like always be getting your head on straight. Not one single bottom wick. Wait, no, not even one pip. It's going for the candle flip at 40.45 maybe. Let's see where it's actually heading to. Where are we at right now? 40.38. And what a beautiful distribution that was, though. How many pips did that peak? Peaked at about like 160. Very nice. Tetra, can you analyze Can you analyze the chat as if you were barely getting on? Like, would you be looking for support form to buys? Oh, you just watch the beginning of the stream. Beginning of the stream, I've literally just got onto the chart the first time since Friday. Literally, that's how we started the stream here today. I have not looked at the chart since Friday. I haven't looked at daily candles. I haven't looked at nothing. So what you're seeing here is just raw trading. I haven't seen no candles, nothing. Maybe I glanced over it like just looked. I just peeked on maybe like a 5-minute time frame sometime, but like this is all that I need to know. I don't need to know any more than this right over here. Just the same way as you wouldn't need to know anything more than this to catch this 160 move, 160 pip move. So we came onto the chart. We took a trade over here at 3 a.m. just as the London session was opening up. And yeah, I mean, that's it. That should already show to you how confident that I am in my abilities to do such a thing. This is a new setup. Right now, everything is kind of not perfect, but when you know, you know. Yeah, when you see a setup, you see a setup. You take it. So it's becoming like tying your shoelace. Now that's all that trading is. Trading should be like tying your shoelace. If trading is not like tying your shoelace, then I think you're doing too much over there. Like if you're gonna tie your shoelace, think about it this way. Do you want to tie a complicated shoelace, or do you want to tie like a shoelace where you're gonna tie it and then you're gonna go? Or do you want to, what kind of shoelace do you want to tie? You want to tie a shoelace that's gonna take you time, or you want to tie one that's gets the job done, will get you from point A to point B? So you know, you could choose what shoelace you want to tie. I think that's actually quite a nice psychological examination as well, because I got the most simplest shoe tie. So simple, I think it's like retardedly simple. But it's because, you know, I like to save time where time needs to be saved. And, you know, I haven't tied a shoelace in... man, I haven't tied a shoelace in ages. So if I was going to tie a shoelace right now, I could tie it so easily. I know it sounds stupid, but it's just the same way. If you're going to take a month off trading, you want to be able to come back to it like that. And you know, the thing about trading is if you don't look at the chart for, let's say 1, 2, 3, let's say 3 days, you already feel out of sync with the market, because look at what has happened in the past 3 days. 1, 2, 3, massive movements to the downside, change of fundamentals. Interest rates have dropped down to the 40s now. You know, so now imagine taking a month off of trading. It's gonna be like a completely different instrument when you come on. It will feel like shoelace tie with eyes closed. No sound? No, there is sound. I think you have no sound. Wait, there is sound. Checking. Yeah, there is sound over here too. Oh, but I need to put music. The audio output. Add existing. Oh, there we go. Now we have music on this screen here as well. Nice. And we got this here too. Yes. Okay. No worries. You never really miss a move. Help me. I was always kind of desperate. Like it's the last ever opportunity. Yeah, you never miss a move. Don't worry. Don't let FOMO get to you. You know, I haven't traded in so long, but I don't care about what other people are doing either. So you mustn't let FOMO get to you. You mustn't let FOMO get to your head. Because, you know, God has his own plans for you. He's put you on your own journey, your own pace. So just take your time. Take your time, but at the same time, know that you don't have time. So you want to move correct. Yeah, this thing's 0.15. Let's see, we got any shots over here. Gold longs, fake out confluence, go back into the gulag, break of previous highs, heading to the top of the consolidation. Oh yeah, that's the fake out right there. So you took it based off that V-shape reversal. Fake out confluence, back into the gulag, top of consolidation. Very nice. Because that even shows that your eyes are in the right place. I mean, you didn't get like a TFX entry, but it's good to see that you're looking at this right over here. We got like another mini fake out situation that happened down there too. Boom, boom. Because markets are fractal, they actually try to do it twice. They had the first fake out right here, and then pull up, came down, V-shape reversal. Also another small fake out right there. So you got 1, 2, 3. So y'all is thinking of markets being fractal, right? Fractal, fractal, fractal. Fractality. Down close the day. 2 prop firm accounts trade. I will leave the others 2 on top step once I have 2 funded. Sneaky sell over here. Is it too late to join this ride? I think there's no structure right now, at least. But now there's nothing. Got this, boom, boom, boom. It's kind of like just moving up right now. Let's see the other time frames. Oh, we got a huge resistance right here on the 5. That's a 15 minute. Got about like 48 pips. 48 pips, about 15 right there. How you doing, Vic? What's up, Real Ellie? I'm doing well, sir. Thanks for asking. Hope y'all are good. Thank you. It's always Vic where buy, Vic where sell, never Vic how are you. I think who was it? Architect said that one time. I think he said it once. Yeah, let's see. You see, we have that resistance here now, so kind of have like a speed bump. So you got to think of this like a speed bump right there. You got a speed bump right here. See this? Man, you know the thing with this other trade? There was no speed bumps. We had room to move down about 100 pips. 100 pips. But I think we're fighting against our SMAs at that point. Even see, we start crossing off our SMAs too. Either way, we start crossing SMA here and SMA here. Boom, boom. Small little break and retest on the SMAs. The mouth is facing upwards like this. Then you have the change of direction. Boom, boom. This was really nice though, man. Like right over here, you had the kiss of death. That also happened. Like the same one that we got on the sell. That made it rip down like 20 pips in a minute. This one also had the same thing. Look at this. Wait for it. Drum roll. Look at that. You see? So that's why that I use what I use on the chart. You know, like you shouldn't use things on the chart that are not serving you any purpose, but only adding more clutter. Because sometimes we're going to think the more indicators we have, the more sophisticated it looks, creates just a lot of unnecessary clutter. So just really narrow the amount of tools that you're going to be using, but make sure you use the most powerful ones. Because, you know, at this point in my trading journey, and I think even looking into the next 10 years, I don't think I'm ever going to change anything. Like, you know, I add these little indicators from time to time just for fun. But regarding the actual way that we trade, it's just going to remain the same. You know, like this is nothing different from what we already kind of look for. SMAs, kill zones, the times that we trade. Like timing is also quite important to understand like how price moves during the times that you trade. Those are not going to change. I could trade this system for the next 5-10 years. I don't think I'm going to change anything. Just going to keep it the same. You don't need to change anything. Like as I say, if it's not broken, it's not broken, don't fix it, right? So look at your strategy and look at the areas where they work. Like that's a strong foundation, and you truly believe like if I keep this part in, like this part, it shouldn't change based off the way markets operate. Like that part should not change. So you want to have a lot more of those parts in your trading system than not. Because otherwise, if you got like a lot of like these unnecessary things, then I don't know. I think what happens is you're much more easier to like strategy hop, right? You're gonna strategy hop. So just look at the market for what it is. What do you think the market moves based off of? Is it like fair value gaps? Is it support and resistance, accumulation distribution? Have that theory and have that theory be the foundation for everything that you're gonna build upon, right? So if it's support and resistance that you trade, then you're always gonna have the support resistance there, but you have to find ways to not change your entry, if that makes sense, based off like because you can have support and resistance, but then some people put like an indicator, so they can have the foundation, but the indicator will overrule the foundation, correct? So you always got to make sure that how you're going to build this house of trading, it has to be built off first a solid theory that's unshakable. So you got to get that part right. You know, just like when you're going to do a thesis, when you're in school and you're going to do a master's, you got to pick a thesis. You know, a thesis can take you maybe like how long, chat? Like 2 years, maybe a year. Yeah, you could do a thesis in a year, your research and everything. So you got to pick a thesis, and you can't fuck that part up, because if you fuck that part up and you start your research, you can't stop halfway in the middle, right? Because you would have wasted like a lot of time. You know, you waste a lot of time on that. So you really got to think about your thesis before you actually approach something. So write in the chat what your thesis is, guys. I want to hear what your thesis is. What's your thesis to trading? Let's see. Do you even got a thesis? Some of y'all even have a thesis? Not taking you back to school. Some of y'all have a thesis? Man, I remember like picking my thesis for anthropology, and every time I would come up with something, the teacher would say, oh, that's not anthropological. I'm like, what the fuck? What is anthropological? So it was like super hard to find a thesis, because everything was like not according to the syllabus. So what's your thesis, chat? Make the market move as I milk it. Nice one, Woods. We got the moo entry, moo strategy here. I trade price action. I think I must add at least one indicator. But you know, price action is also pretty vague. Yeah, that's what used to happen to me in school. The teacher would say, oh, that's too vague. And I would think it's like not vague, but they would always tell me that's too vague, that's too vague, that's too vague. So like price action is too vague, because smart money concepts, people say that they trade price action. FEG, they say it's price action. Support resistance, Fibonacci. All of this stuff is like price action. MACD, divergence. That's all price action. You see, some of y'all don't even have the thesis. I full port a thesis. Come on, where's the thesis, chat? TFX concepts. Y'all should be saying the thesis is TFX concepts. Volume profile. All right. Got Marco with the volume profile. See, if you don't have a thesis, man, what have you been doing this year? What kind of research have you been doing? You know, I'm not saying this to be mean. I'm just being honest. You know, because like when you're gonna start trading, it's just like going back to school. It's going back to school. What have you done? Where's your work? What are we building upon? What are we building upon? Some of us still finding out thesis. That's also fine. Still looking for our topic. That's good. That's good. Don't rush it, but rush it at the same time. Wicks and dips, no whips, straight pips. Simplify your workflow with internal syncing and TradingView app. Nice. Bond data from 15 major exchanges on TradingView. Okay. Little from column TFX, a little order book analysis, and a little Wyckoff. Very nice. Yeah, Wyckoff was really nice. I don't know why we tend to gravitate to Wyckoff a lot. I'm pretty sure there's a lot more scientific models out there. But yeah, we tend to gravitate to that one quite a bit. I used to have Wyckoff on the walls next to me with a spring and everything, and I used to look at that. Then I look at the chart and say, okay, is this it? Then I'll change the time frame, and then the time frame would look completely different. So how far we got? 1559. See if we can get the count to 2000. If you join the Discord, go to the count column right over here. See if we can get it to 2000. We're currently at 1559. 1559. All right, maybe Goldie might be looking for a sell here soon. I see it's like accumulating, starting to break these lows. Got some clean traffic down towards this next support area over here. This range is about like 117 pips. Candle just closed bearish, closed below that 8 SMA there. So you got a shotgun play. I think at the break of these lows right over here, after creating a top wick, price should move down to fill this range. Well, that's at least what I would be expecting. Current bias right now is waiting, so we're just currently at 0.30%. Which means that there's no necessarily any direction. It's a mixed bias. We're just kind of stuck in this range over here. See this? Look at the way price behaves when it approaches such levels like this, because you got speed bumps here. You know, that's why I think like market likes area of least resistance. If you look at the size of this candlestick, this is like an imbalance that was formed in the market. Look at how big that candle was, right? I think we can all agree this is kind of some kind of like an imbalance, right? It feels like some kind of imbalance. Because whenever we get big candles like that, it usually is not really a good sign. Unless obviously you had your trade and, you know, it was a profitable trade like this and it played out awesome from the entries down here. But if you're going to take a buy above here, it's not typically a good sign to have a long candle like that. So, you know, with a bit of imbalance, very nice top wick that's been formed. Path of least resistance is literally right here. With a solid top wick, break of the lows, we would expect price to really come down at that point. I think yesterday you had like a really nice play like that. That's the one that I saw on the 5-minute yesterday. Let me see. Oh yeah, it was right here. So, oh wait. Is this a... What levels are these? Oh, these are the levels I drew yesterday. Yeah, we had this range. I was watching this range here play out. This was like during the New York session time. As you can see, like let's go on full screen with kill zones. Boom, boom, boom. Nice little shotgun right here. Basically, it's essentially what's happening right now, correct? In terms of just the way the candle closed. You see candle close below support. Right, this support. Path of least resistance down over here. Candlestick closed. Next candle. Create top wick. Broke the lows. Nice little SMA confluence here. You got that SMA crossover, the 8 cross of 50. Clean range down towards like 40.66. Boom. Mopped up. Path of least resistance. At the same time, we can all agree. I think we all know what mirrors are, right? Like, there are these intrinsic things, I think, as most of us, we can objectively, as much as we all trade our own kind of like systems, look at this and kind of like agree on certain similar objective things. Like the market likes to mirror each other. We all know that. In terms of clean ranges, we don't all look at the clean ranges the same way. Some people like to trade against them. Some people like to trade with them. But we can all agree markets like have some kind of a mirror effect. Right? However you see it, with clean range or not, it has some kind of a mirror effect. Right? It likes to mirror each other. And you know the beautiful thing about this entry here was you had the accumulation too. Accumulation, closure below support. What else do we got? Let me see if anybody gets it. What else? Right in the chat. What else do we got? I'm going to name, we got SMAs, closure below support, top wick, okay, break of the candle lows, consolidation. What else do we got? Because we did a video on this one time. I had to take that video down because some YouTube problems, but it was a really good video. What else? Liquidity. Oh, I didn't even see that. Nice. Yeah, we got liquidity here. I was kind of looking for something else. This is something that we made a video once in the past on but it's I don't know, it might be hard to catch because like it was only there for a second. But I think the thing is like the New York session should probably put the kill zones on for you as a tip. But yeah, we got the New York session over here. So this New York session volume, right? You got New York session volume. We got liquidity grab here. You got one up here too. It's a fake out. That's an NY open fake out. So you see what happened with London session right now? How London gave it like that quick 20 and then it moved up. Same thing happened right here. Look at this imbalance was formed. You see this candle, how big it is? That's why I said imbalance in the market. Big candlesticks not really always a good sign like that. All right, imbalance in the market at a key market open. Boom, you get the NY session open fake out. You get direction right here, the lows. Candlestick close below support. You're looking at the way it's coming down. Boom, boom, boom. Very nice entry. Very nice entry. You see that those small little things, which is just like, you don't, in trading, you don't need to know everything, right? You don't need to know everything. You just need to know those small little things, the small little tips and tricks. That's how you're going to avoid like, certain situations where, you know, price goes in profit then goes against you. Also, you see that was the London open. So this is essentially the same thing that I'm showing you that happened there in New York, but it's like less candles, a lot less candles. But you see, you still got the London open fake out to rip up, and then boom, maybe now we can start to see a sell-off. It's a break and a retest. Now it's becoming here. Oh, it actually broke the lows. How'd that 5 minute actually break? So it created a top wick, then ended up breaking the lows. Kind of like rejecting. Oh, it's like hovering. Oh, no. Not yet. We're at 0.30%. Kind of like rejecting the zone here. It would be nice to see this thing just tumble though. Because I think like when it comes to buys, the buys don't have as an appetizing range as the sells do. Unless it fakes this level out over here, breaks above that high, you have about like 46 pips. But the sell range is a lot bigger and you got that imbalance there too. Let's see, it's pulling up quite aggressively. How much should it peak again? Oh my days, another 20. It's like the same thing that happened to the first trade. Pick like you see 20 and then it's volatility. There's a bit of volatility. You can tell by the way you see it's like when it pulls up and behaves like there's a little bit of volatility. So it's kind of essentially doing the same thing it did before. Pick like 20 and then pulling up aggressively. So you see that always like these small things that happen in the market like over and over and over and over and over again. So that's why it's super important. Man, let me tell you something. Like honestly, if there's something that you're seeing with your strategy at the moment that you're finding whenever you're taking a losing trade, there's a certain thing that happens. You have to find a way that you're going to approach that next time it happens to you, because it's going to happen again. That's the thing about the market. Like a lot of these things that, you know, when we know our trade is going to be a losing trade, it's going to happen again. So if you catch on to something, you got to like see how you're going to approach that next time it happens. And that's how you're going to start like, you know, now managing your risk, getting better. And through that, you actually start to see like other opportunities, like how can you maximize your profits, you reduce risk, etc., and just really like take back control of your mental game. Because, you know, you're going to feel like you have no control when you're not like fixing these problems, right? You're going to feel like you have no control. But once you start looking at risk, man, you're going to take back the control, and actually your profits might be in your losing trades sometimes. In how, if you're going to be losing more, you got to see like what's the common pattern that the trade that is losing a lot, and you got to see it like on different angles, right? Like what's happening there. Is there something that consistently happens? And let me tell you something, that's how accumulation breakouts were formed. That's how accumulation breakouts were formed, because sometimes I would wait for these moves on like 15-minute time frame, 5-minute time frame closes, and then have these really aggressive reversals against me. And then I'm like, okay, so I don't see anything on the 5 minutes. So I started investigating the 1 minute. So every time I would take a trade, I would refer back to the 1 minute time frame. Correct? And through that, I started realizing there's a certain thing that happens on the 1 minute time frame that I could start executing on. So, you know, it's very important. It's very important. Don't just take a trade and then walk away from the chart and say, oh man, you know, I took a win or a loss. Don't do that. Will gold cross its all-time highs before New Year's? No, I don't think so this year. Probably like next year. But this year, like we thought we could right here, but as you can see, the dollar is not planning on having rate cuts anytime soon. Government has opened up again. The US government shutdown is over. So it's not looking very bullish for gold in the long term. Let's see. Gold extends falls on firm dollar, easing Fed rate cut bets. Vice Chair Philip Jefferson said on Monday, U.S. Central Bank needed to proceed slowly. We read this one. Everything is about the U.S. rate cut bets. You see right here as well. We got one from Dow Jones Newswire. Gold prices fall for a fourth consecutive trading session, weighed down by the reduced expectations that the Federal Reserve will cut rates again this year. So you're going to see a lot of profit taking. It's the end of the year too. You know, rich people want to be rich as well. So they're going to like enjoy their money. You know, so it's the end of the year. They're going to take their money out the markets and they're going to do it again next year. Market scale back bets to below a 50% chance of a reduction after several Fed officials signal caution, even as Governor Christopher Waller voiced support. Market watchers are now waiting for the release of a September jobs report. Yeah, at the end of the year here, people are gonna take profit. But I would say the only caveat to that would be, because, you know, money never sleeps. So the only caveat to that is if there's something that bolsters the price of gold up. So if something on the horizon comes, maybe Powell says something that now rate cuts are going to happen, or after we get the jobs data, the NFP, unemployment claims, etc., and then those numbers change and shift back to like 70% or something of the sort, then we're going to see people come back into the market. But as of right now, I would say gold overall is dormant, but it still has a lot of freaking volume inside of it, like a volcano. It's like a dormant volcano, something bubbling up underneath the surface. It's not exploding. It's not creating the all-time highs, but it's bubbling. It's bubbling. It's bubbling. So that's how gold is doing on the intraday time frames. But remember, different players in this game. You have long-term investors, short-term investors. So for the long-term investors, it looks a bit more dominant for now. So it's always just about objectivity. You know, I think like in life, it's a good skill to have anyway, is to be objective. Is to be objective and see things from different angles. Because, you know, at the end of the day, life is what you make it. Right? So you kind of want to remove yourself from the equation sometimes. Because what happens is, like, if I give you an experiment, right? So if somebody, let's say you're sitting alone at home and your family goes out on a vacation and you hear a knock on the door. So your first thought will create your reality. If you think that maybe there's a burglar at the door, then your first instincts, your brain is going to wire an emotional output of fear, right? And that will change the realities around you as well. You start to feel scared, anxious, nervous, etc., etc. But if you think maybe your family came back from vacation and the knock at the door is maybe your family coming back home, you feel happy, pleasure, excited. Your whole reality shifts, like the whole room around you changes, right? From one room that's full of fear and uncertainty to one room that's full of happiness and optimism. So it's all about like how are you gonna shape your reality, you know? How are you gonna shape your reality? I always say, if you're gonna wake up, might as well have a good day. Might as well wake up and have a good day. Bro, gold chart and BTC looks like a bit familiar. When BTC moves up, gold also starts to move. BTC should be on its way down. It's like breaking a 100k. Oh, look at this. Look at our analysis here playing out. We haven't yet gotten our right shoulder though. I would love to see one more dip above that 100k. I think that would be easy pickings for the institutions. One last little exuberance boost. Let's get some of these lemmings aboard the train to downtown. They just need one more push about 100k. I think that should drive enough exuberance in, get more retailers in there, and then like completely dump. Same thing that happened with our prediction from 2021 over here, when we predicted the last push of 60k down to 15k. So this one is now coming down quite aggressively here, but we could always still create that right shoulder before heading down again. But yeah, right now gold, Bitcoin is really shitty. And we've known this. We've known this already. So yeah, no surprise over here. It's filling this range. See this range? The same thing. Literally the same thing that we do on the lower time frame is happening here on the weekly time frame. So you see, it's that Russian doll. If you start thinking like that Russian doll, then you start mastering all aspects of the universe that is trading. But if you're not thinking like the Russian doll, then you know that you're only gonna see like on face value what you see from just the first piece. So like that's to say that trading is multi-layered, right? Multi-layered. The Russian doll that starts big and ends small. Multi-layered. Don't let nobody lie to you that higher time frames are safer, etc., etc. It's all the same thing. You get faked out on a higher time frame, you're gonna fake out on a lower time frame. It's just your approach to the market, correct? So you see this happening on the weekly, and we're still having that mirror effect. Remember I talked about objectivity and the mirrors? Still having the mirror effect happen over here on the weekly, coming down. Trust me, man. One thing I'll just tell people is when they ask me what I do, I tell them, okay, you know, I do day trading. I always tell them, hey, but listen, if you're going to start day trading, I just want you to know, even if you don't become profitable, this is a skill that will give you value. Like it's knowledge. What you're getting here at the end of the day is going to be like knowledge, very valuable knowledge. So if you watch the movie The Matrix, learning this skill is like being Neo in The Matrix, right? Maybe you might not be Neo because Neo is profitable. Maybe you might be a side character, but still that exposure to the world markets and understanding how things operate is invaluable. You can't put a price on it. Literally, you can't put a price on it. It will shift your whole mental game towards everything. Hey, what's up, explorers? What is good? What is good? If that happens, maybe some people would make it to Christmas If what happens? Oh, if Bitcoin comes down, keeps going down. Oh yes, some traders, some accounts here are not gonna make it to Christmas. Yeah, I don't know what happens towards the end of the year. Some people, they're gonna like also take really bad trades. Maybe because the year has been so good for them that they now start to over leverage. That's funny though. Passed my first combines yesterday, so funded and really ready to go. Wish you a payout, Ryan, before the month ends. Hope you secure something over there. Treat yourself for all the hard work you put in. Took 2 losing trades today. Only good thing as I managed my losses. Amazing. Very, very well done. Nothing better than taking a losing trade that you've managed your loss on. So I took 1 trade today, break-even trade, managed my trade. Nothing better than a managed trade if it's not a winning one. Buys on the rebreak, or will that be risky? No, I'm not trading right now. I'm just gonna monitor the market. I'm just looking at the way it's moving, but I'm not trading. I'm seeing the counter trend moves, which are now becoming counter trend moves, like the sell here and the sell here, dishing out about like 20 pips. So the market is not being aggressive. It is giving profit. It's just giving you enough profit so you can manage your trade. The market's not always out to get you. Like the way I like to think about it, chat, is the market's not always out to get you. Like if you're gonna focus on like if you notice your trades, if it hits like a certain amount of pips, safest time to go to break even, go to break even. Sometimes like 20 pips, 16 pips, because the market is giving you an option, right? It may not be a profitable trade. It might not be the trade that you want to catch, but I think the market will give you those options from time to time. Like you can take a break even right here. You can manage your risk right there. You can, it's going to give you like an insurance. Just the same way you're playing blackjack. If you're on the blackjack table and cards are high, the dealer might get a joker, might get a blackjack. Then you can take insurance, right? You can choose to take the insurance. The market will give you those options. It's not always out against you. It doesn't have to always be a win or a loss. Like that's the thing. That's the thing. You got to start looking at it from a risk perspective. So I think in this case today, what the market is doing is giving like 20 pips. 20 pips, that's been in the game plan for a good part of this year as well. If it hits like 20 pips, we're at break even. Because it should just keep going at that point. So again, like 20 pips, break even. 20 pips here on the second attempt, break even. You see, and that's all part of the rules. That's part of the playbook. Because we preempted this. We preempted this happening. We've seen it happen. So next time, we're going to be ready for it. Because other times, it would maybe give you like a consolidation and then go against you. But you see, when markets are volatile, there's no time for that consolidation. So it just like spikes, 20 pips, boom, stop loss to break even. And that's what you got to have in your rule book. Is how can you account for those times that there's not enough structure being formed for you to manage your risk? All right. I think it's all about balance at the end of the day. Like you truly have to find balance with your system, with your ability to follow it. And again, that only is possible with simplicity. And that's why for me, TFX concepts is the way I do things, because I keep it very, very simple. You see it like this, boom, look at this, 20 pips. Did it come back into entries? No, it didn't. It continued to move up there. Skyrocketed on the next candle like about 61 pips. Here, gave like 20 and then pulled up. But if you're new to the stream, just welcome first of all to the best London session stream. What you're gonna want to do is at least give it a month. Give it a month. Watch the stream for a month. See what gems you can pull out of this, and I guarantee you, your trading is only getting better. Only getting better. Do you live stream 5 days a week on YT or London Open? This is my first night watching you. Yeah, we trade like Monday to Friday, London Open, exactly 3 a.m. Eastern. You are correct, sir. True, you don't have to wait for TP all time. I close profit. I always say market doesn't owe me. Yeah. You know, I think it's also like when you're going to look at managing risk, it's also because you can't be perfect all the time. So what the idea here is, if you look at the way I jumped onto the charts straight on the 1 minute, haven't looked at any analysis since maybe last week, Friday. The idea behind the risk management model is to protect you from things that you're missing out on. So for example, after the fact, I noticed, okay, price came from the Asia down to 4,000 psychological mark. Like you miss out on these things, which usually are more obvious in hindsight. Right? Because if you're truly locked in, you can find yourself or give yourself better opportunities to catch trades with more patience. Right? But if you're executing on a daily basis, you're not going to be 100% perfect in terms of reading the whole flow of the market. So the risk management is just there to protect you from such things. You're going to be taking, let's say like two trades a day, 3 trades a day. Because you won't see every single thing happen. You typically see it a lot more in hindsight. So that's why we manage our risk. Some people are different, you know. Some people, they're gonna take like very less trades, but they're gonna aim for very high probability trades. There's certain trades which are just really high probability. Like example, if I took like a 16 pip stop on this, I could actually gotten away with a pretty nice dub. But there's some really nice trades where you just know. Yeah, it's hard to explain. Where you just know like it's so much cleaner. Like this trade that we took here today, it's not the case because we saw in hindsight that 4K was already hit. Yeah, but we need to take a lot more positions before the month year ends. This might be the month with the lowest amount of trades that I've ever taken. Taking about like 13 trades so far this month. Need to get these numbers up. These are like rookie numbers for day traders like us. I'm looking at your Discord page. It mentions live Zoom trading access. What session are you trading? Trade the London. I trade the London. I send signals for pre-London, New York session. Pre-NY, I mean, sorry. My data assumes that prices moves from balance to imbalance and vice versa. I use volume profile to determine objective support and resistance. Once we're imbalanced, I would follow it or fade it. But you see, is a volume profile really objective? Because you got to now dig into that. So you say volume profile is objective. Where is this data coming from? So you first have to understand where is the data coming from for it to be objective. Because if you ever see that meter, some brokers have like this thing that shows you if there's more buyers or sellers in the market at a certain time. Depending on the broker, it could say something different. Like depending on the volume profiles, they could say something different. You know, so you gotta see like what's governing that objectivity. For example, is $4,000 here an objective mark? I would say it is an objective mark. It's a whole number. It's objective. We typically get a lot of a fundamental surrounding when we're around a cool numbers like this. If you go look at your news, it's quite objective. You know, it's obvious. It's big. It's right there. You know, if you got a market move like this, for example, is it objectively moving sideways? If this is the only thing that someone gave you. So here's the thing. If someone gave you this chart, is it objectively moving sideways? If this is all that you see, nothing else, just this chart right here, I guarantee you, if we put like an exam, you're gonna have a portion of the group say that it's moving up, right? And then, but the largest portion, I think, should say it's moving sideways, right? This is where price is currently sitting at right here. It's just moving sideways. So that's what I like to do with my trading. Like, I trade what I see. I trade what I can prove. That nothing, an indicator is not going to tell me the information. That I tell the information based off just organic price action. So that's kind of like how I'm going to approach a lot of things. When you tell me, for example, are we trending bullish or bearish today? What are we doing, chat? Are we trading bullish or bearish? I'll say we're trading in no direction at this moment. You see, we're just waiting because that daily candle has pulled up. So this is an objective bias of where the daily candlestick is moving. So if you go on the daily, we push down. Look at this. We pushed down heavily during the Asia all the way up until, I guess, London open, right? But look at the way the daily looks right now. This is the volume of the daily candlestick. It's just but a shadow of what it once was. So what does this mean to you? It means that we are objectively waiting. We're not trending anymore like it was before. Before it was like this. Before you could say, yeah, you know, price is still moving down. That chode over bearish candle like this. But now look at this. And it's still pulling up. Look at that. The candle is getting smaller and smaller. 92 pips. 92 pips. A 5-minute candle is like 60 pips. Can go like 60 pips, 70, 80 pips. The daily candle is 93 pips. So can we objectively say that this daily candle has no direction? Based off the simple fact that it is what it is. You're not trading yesterday or the day before or the day before. You know, all of this is all in the past. I don't even know why some people are concerned about this. Because if the daily is not going anywhere, your trade is not going anywhere. You know, so what difference does it make if there's some kind of analysis you've done all the way back over here? You know, that creates a lot more subjectivity, not enough objectivity. You know, I think what I'm saying here should make sense. I'm not making anything up. And if you truly want to have an open conversation about it, I think you will also see it too. Unless, you know, you're going to send me a chart and then we're going to look at your chart here in the Discord. You're going to send your analysis and we're going to look at your analysis. I'm using order flow at the moment, but you need PA. That's the most important. I use as Confluence. PA is king, sir. PA, price action. Money is king in F1. Price action is king in trading. Because no matter what, candles, if you can't read candles, then you can't trade at the end of the day. Because if you get into a Formula 1 car, if you can't drive, generally speaking, you can't drive a Formula 1 car. You know, if you can't drive a Honda Civic, how can you drive a Formula 1 car? You're going to get into the Formula 1 car. You're going to see all the buttons, all the indicators, da-da-da. But you know, how are you going to get from point A to point B if you never learn how to drive it? I never learned how to drive the car. That's what price action is. It's literally the foundation of everything else that comes above. Not the other way around. Because people like to do it the other way around because I think what it is people don't like taking accountability. So they prefer to have like a robot, an indicator, show them the entries. Or a tool show them the entry. But you gotta take that trade. You gotta execute. You gotta get into the habit of execution because For me, I personally believe, like, if you look back at the traders back in the pits, you know, how people used to trade back in the day, that was raw trading, man. Like, you have papers flying around the room, people shouting. That was raw, organic trading, right? They didn't have the scapegoat of saying, oh, this indicator, oh, this robot, oh, this and that. Now, that's what we call the boomer generation. The fuck around, you find out generation. Speaking of F1, will you go to Vegas to watch it, or you prefer watching on TV? I heard watching F1 in person is shit, because you only see the car for a split second and it's really loud and you can't really like enjoy it as much as if you just watch it on the TV. That's what I heard from everybody who's gone to watch Formula 1. I mean, sure, I think the first time it's cool, like you're gonna hear the engines and you know how they move, the car, how it like whizzes by and whatnot. But I think after a while, when you actually want to watch the race, you can't watch the race because it happens so quick. You know, it'll be sick. It would be sick to get a yacht in Monaco and then watch it from your yacht on a TV. Oh, that would be awesome. Get like a nice TV in the yacht. You can hear the car outside, but you can watch the whole thing. Like, but in your yacht. That I think that's the most goated way to watch a Formula 1. Need a yacht chat. We need a yacht with a helipad on it. Is it long? Hey, why don't these lifestyle guru guys ever show a yacht? That's actually quite interesting. They never really show like, obviously they fake everything, but why not just fake a yacht? Fake a yacht with a helipad on it. Rent a yacht for the day. I think renting a helicopter for the day would be like about maybe $2,000. At least where I live, $2,000. Just about maybe 1,800, something like that. Rent a helicopter and rent a boat. How much would you rent a yacht? Come on, these lifestyle gurus are really slacking on their Bugattis all the time, showing us just the Bugatti. I want to see a yacht, man. How much is it to rent a super yacht? I think that would have to be a super yacht. Oh, okay. This is renting a super yacht costs from 150 to over 2 million per week. They can do it. They can do it. They can do it. Lifestyle gurus are gonna spend this type of money on this kind of stuff. I think. Wait, 150 for a week. It's a lot of money, but it can. Man, look at this thing. It's like a James Bond villain over here. Imagine trading on this. You're gonna put your Starlink. You put your Starlink somewhere around here, and then you're gonna sit there, and then you're gonna trade. I think that's what the guy for FTX on the yacht. FTX brokerage. I'm short on gold. I'm not touching gold right now. It's like, you know, we've already had the volume happen. It's probably gonna chop until maybe like pre-New York at this point. That's why I'm anticipating for Goldie. So currently right now it is in a no trade zone with a potential to keep moving down. Now it's all a matter of timing, right? When is it gonna have a higher probability to move down if price is consolidating right now? And you know, to get that answer, we don't have to go so far back. We only just got to go back here to the previous day and see what did gold do during the London session to when it started breaking out of the range. And what time was it having a higher probability to do that? See, don't have to go too far back. See, that already happened here during the New York session. So that's what I would expect from London right now is chop, chop, chop. If you look at the time, it's 4:41. This was actually much later on. But anyway, the example still... Wait, what time is this? I'd say like 6, 7. This was 4. Yeah. Oh, okay. So if it starts here, it's gonna be still a bit too early. Yeah. This is 4:40. This is 4:40 right now. So the pre-London will start at pre-New York will start at 6. No, 5. So wait, but next candle is about to open. 5. No, not 5. 6. Yeah, the pre-New York starts at 6 a.m. Yeah, so it's still a bit early. This is when the pre-New York was yesterday. So you see, pre-New York right here. And then busted into the range. Then there's always like a higher chance that the breakout will come at New York session time. See, from 6. 2 hours. There's like 2 hours before the New York session opens. Boom, boom. Yeah, right now it's still early actually. You can't hold this. I don't think it's going to hold that range necessarily until pre-NY. Still got time to kill. We got high impact news too. Oh, let's see. What do we have over here? We only have wage price index for the Australian dollar. So, I don't know. I think FOMC, that's tomorrow. We don't have anything today. Oh, we got unemployment claims. But that happened at 3:10? Wait a second, I'm tripping. This jobs data is being released at odd hours now since the government opened, eh? We had unemployment claims at 3:10? What the hell is this? So you're telling me we took a sell on gold during 10 minutes before red folder came out, but the numbers came out neutral. That never happens. That never happens. We didn't even see that on the calendar. Chat, this was not on the calendar when we started stream. I remember seeing this. Man, that's crazy. London session doesn't get that type of action. It maybe was a reason why price ripped up too, but numbers came in neutral. Why spend that much money on a house? Oh. Why spend that much money on a yacht? I think people are gonna buy a yacht. They're gonna not spend like earned income on a yacht. It's just like, okay, so I got all this money here, I gotta spend it type thing, you know? Because money becomes a byproduct of everything that you do. And if you're gonna be really good at what you do, then it comes in a lot. Why not? Because you're not working for it. It's like literally passive. You can never own a yacht, I think, with earned income. Even like if you go on like Monaco and you see all those yachts over there, for me what it looks to me is old money. It's families who've had money for a long time. I came from a family which very normal family, super middle class. We don't have that kind of money, but like the ones who own yachts come from like old money. Like I got a buddy, right? This guy's dad owns or is one of the stakeholders for a huge bank in Europe. It's called N26. Man, this guy comes from old money. You know, he's like super rich. He lives in Switzerland. He owns a yacht. He recently had his birthday like about a couple months ago on his yacht. And you know, that's like generational wealth. That's typically what you see. And then every now and then you're going to see the occasional FTX guys, Silicon Valley, I don't know, maybe what have you. But majority of those people are coming from old money, passive income. It's all just about passive income. It's just the thing is like we're not taught how to manage our money, you know. So when we start making a lot of it, we tend to spend a lot of it. That's why you see a lot of like rappers. Kanye West raps about this as well. It's like once you start making money, you're just gonna spend the money because you never had the financial literacy on how to keep it and how to grow it. People are really good at making money, but when it comes to generational wealth, that's a whole other thing. It requires a whole other discipline, and most of those people are approaching money more boring. You know, they have a boring take on money because making money should be boring, like Warren Buffett style boring. You know, that guy is one of the most richest people in the world, and he still drives like a super old Chrysler. You know, because making money should be boring if you want to get to those extreme levels. At least I think sustainably. Old money is the way to go. Old money concepts. A lot of people make money, spend money. So when you find your trading success, you're going to have a few dilemmas. Whether to buy that Rolex, whether to buy that car. Want to buy that car? Want to buy that gold chain? You know, what do you want to do with your money? Or do you want to just keep growing it? Invest it wisely, invest it smartly. Like for me, I wanted to buy a Rolex, you know, but as I said, at the time I was dating this girl and she told me like people who wear Rolexes, if you're just doing it when it's not even like in the passive stage yet, you're just kind of showing off, right? A lot of people just like to show off. And I thought about it and I was like, yeah, you're right. Maybe it's not a good look. It's not a good look. It's much better to like be smart about it, because you know, like once you have, let's say, your first year of savings in your bank account, trading becomes so much more stress-free. You're able to wait. You see, like right now people can't wait, but you're able to wait. You're able to make more of it because you've chosen this path, where most people are going to choose this path, and when they start running out of money, they're going to like, you know, have a lot of problems. But in the short term, they look like they have a lot of money. Like I got one of my favorite mentors. I'm not gonna mention any names. Dude lived in an apartment in Miami. He owned a Urus. He owned I think Mercedes-Benz Maybach. He owned an Aventador. Mind you, he's owning all these cars. He had multiple Rolexes. He had so many bands of cash. So many bands of cash was always flaunting. And the guy lived in an apartment, bro. An apartment in Miami with fucking those beautiful cars sitting outside. It's like, man, we live in the same apartment and you're driving this car? Make it make sense. You know, make it make sense. Make it make sense. How does that make sense? That's not the way to grow money. And what happened is I'm not going to mention any names, but he kind of like fell off really hard. But you know, because he has a skill to trade, he has a skill to make money, he made it back. He made it back. But that was 5 years ago. That was 5 years ago. He had all that shit. 5 years now, this was recent, like maybe a month ago or something. He had lost everything. He had lost everything and he had to make it back. So now imagine 5 years of steady growth and savings and applying good risk management overall to 5 years of just showing off. You know, huge difference to what you can achieve. Massive difference. And then I got another guy over here. Man, this guy's 5 to 10 year growth has been insane. Insane. And since day one, he had always said, I'm not going to mention the names, but since day one, he always said, all that stuff is going to come later. All those supercars, all those Rolexes, all that stuff is going to come later. And man, it came later. It came later, man. And that's a lot more stable. And that's for me what I do. I've been trading for like, this is going to be my 6th year. And I'm always telling myself like all that stuff is just going to come later. Right now, you got to focus on the charts. You got to focus on price action, discipline, patience, good risk management, just having a good head on your shoulders, not being emotional. You know, a lot of people, super emotional. Those are the people who show off. Super emotional people. So, you know, you just got to like build your character here in the markets. 1 to 2 trades a day, manage your risk, and learn to maximize your profits. You know, you got to maximize your profits. Learn to maximize your gains. But the only way you can maximize gains is if you're going to keep what you're making. Because if you've had a profitable trade today already, and let's say you're up like 1.5%, 2%, you don't need to take another trade, because what's harder than making money is keeping money. Keeping money is a lot more difficult. Look at this accumulating here. Still no trade zone, but it's getting ready to break, guys. You got support over here. You got potential fake out liquidity grab below the lows. Boom, boom, boom. It's gearing up for the next move. This is the bus stop right here. Look at this candlestick is starting to move up here. More like 34 pips. I don't know. Maybe like gold might reflip, start moving up again. Daily bias is still on waiting. You know, such moves like this are a lot easier to read if the, let's say the daily candlestick was a bullish already, had flipped bullish and it was moving up. Kind of like what we saw happen on these previous days right over here. See, as price was moving up, boom, boom. If you can just get like candles start moving bullish, these type of breakouts I think are really nice and should actually keep playing out. That's above like 40-42. It's a lot bigger one than this one was. You see, essentially it's like the same thing that was right there, but it's happening on a much larger scale right here. Rolex is nice, but it can get you in trouble. Walking down the street, you can be a target. Makes more sense to move down in terms of macro. Yeah, walking with a Rolex in London, you're gonna get shanked. You're gonna get shanked, mate. But I love the way they're dressed in London. Like, people in London have a really good fashion. Like, if I ever get a suit, I get a tailor-made suit in London from a tailor who designed suit for Churchill type tailor, you know? London have really nice suit. They dress proper. A lot of stabbings. Like, how does London have so many stabbings? Like, people think, you know, like if we're gonna think about the let's just say, all right, let me not get there. Let me not go there. But it's crazy how much people talk about that. They made that whole series on Netflix about it too. Forgot what it was called. It was a really nice series. Problem with like UK, I guess, is stabbings. Problem with America is guns. You're gonna get shot in America, you're gonna get stabbed in the UK, so where do you go? Here you go. You gotta go to a third world country where people don't have access to guns as easily, and you know there's no stabbings. I never hear about stabbings in those types of countries. Maybe you're gonna watch a movie, you're gonna watch like Blood Diamond, then you know that's just like Hollywood. But Portugal. Look, it's breaking out now. Look at the 5-minute close above resistance. Boom, boom, boom. Let's see if it actually follows through. It's trying to break this resistance here on the 15 here on the left hand side. It's trying to get through that zone. See what happens. Let's see if it's faking out. It'll be crazy to see it fake out twice, because you see how it broke below here once. If it breaks above here again, it's coming back into the range. Then it just ranges like this, but it shouldn't fake out twice. That would be freaking brutal. Boom. But we already saw that happen. Was it last week? Yeah, we saw that. Was it last week? I can't remember. I think it was last week. We saw a range that was once like really brutal like this, where it faked out below and then it faked out above, and then it just consolidated. But yeah, typically it shouldn't do that. It shouldn't do like two fakies. So if it fakes below here, and the market, I think it looks like it's just been moving up since that $4,000 mark. So even getting that daily candlestick flip here at like 0.04%. But it's breaking out of the accumulation here. About like 46 pips above. 46 pips. You see, that's why I said like this is a bus stop, right? If you notice something about our entries chat, our entries usually have like these pushes. Why do we have these pushes when we take our entries? Why do we have these pushes when we take our entries? You know, that's something that I was looking at and thinking like, why does price move like this when it has a certain thing play out, you know? is because that's a high confluence areas. So a lot of people are getting conviction about direction, you know. These ones are random. Like for me, anything like in between, for the most part, could be slightly a bit more random if you don't get a setup. But when it breaks clear as day, like up there, this is more clear as day, it should just move up. See, like it broke here, but this is a mini one right here. It did actually, if you even look at this, this is a mini inverted head and shoulders. Left shoulder, head, right shoulder, boom, boom, boom. SMA confluences, broke, conviction, started moving up. That's the first entry. The second entry was here, broke, conviction, started moving up. Again, see the same way as it's happening here. Broke, conviction, start moving up. And what's the lesson the market's teaching you? This could still move up. Remember what we talked about? Like if somebody buys, remember like we use this example. Like if Luke takes a buy over here, right? That's his orders getting into the market. But the market can always come back down to see if there's any more Lukes that want to continue pushing price up. That's why sometimes you have these pushes and then price retraces down. And then can continue pushing up. It'll try again, see if there's more buyers. If there's not enough buyers, it's going to come back down again. That's why typically you'd sometimes see like the retracements before price goes up again. Because you can actually have one player make this move and then the market keys them in, but then it comes back down to look at more orders to get filled so it can continue moving up. Because remember, the job of the market is to look for orders, right? So if there's not a lot of buying activity, then then at that point it's gonna come back into the gulag, right? Because the market has a different objective than a trader will. And that's why for us, sometimes when we take like a buy like this and we're like, oh man, we got to hit that 1 to 3 risk to reward ratio. See, the market doesn't operate like that. It doesn't operate based off of risk to reward and such things like this. When it moves, it moves. Let it move. When it doesn't move, you got to manage your risk. You got to manage your risk in the trade. So you see in this one over here, it peaked at about, how much did it give you? Like about 40 pips. You see, it gives you profit. Just the same way as the first trade gave me profit. It gives you profit. But then you got to manage your trade. You mustn't be too greedy. It gives you profit. Don't be too greedy. Especially in these market conditions, chat. Like if you see gold, of late gold, let's say since like January, March, April. Let's say since like April, man, gold has been giving so many amazing pushes. So many opportunities for you to, like secure something, or put your stop loss to break even. Because like a push like this, okay, so like a push like what we got during London Open was like 20 pips, right? A push like that on our normal gold volume, let's say like 2024 for the most part, is probably going to be like 15 pips, 10 pips. It's a lot smaller. But this year you're getting like really nice pushes. So like that's one aspect about gold that you have to take advantage of, is when you get your trades, expect bumper clot trades, expect trades straight into profit, trades that don't give you a hard time. If gold is giving you a hard time, then that means like it's not ready to go. It's not ready to move. Because the way gold has been moving this year, it doesn't give you a hard time. It does not give you a hard time. Straight profits, come on now. Even if it retests entries for a bit, it'll retest, but it should retest even preferably before it starts moving. And then continue in that direction. But I wouldn't sit around for too long, because what you're trying to capitalize off most of the time is this, right? Even if you want to hold a runner, that's what you're trying to capitalize off of. Trying to capitalize off this clean movement, correct? Easy. I look forward to putting all I've learned from this year into 2026. Amazing. You should put it in tomorrow. Don't wait for 2026. Tomorrow is not promised. Today is only promised. So you gotta put the work in today even. But yeah, I understand what you mean. It's coming back for more looks. Do I have any more looks over here? Can push price up. It's dipping its toes. Volume is a bit poo. Yeah, it's gonna give you like a push, but you see, it's buyers make money, sellers make money, pigs get slaughtered type a price action. That's all it is. Luke's not feeling it right now. Let's see. I just need to entice a bit more. Yes, that's why it's came down like this. It's gonna entice them a bit more. Back at the auction. Back to the auction. So those rich people you talked about are all filling their boats with fuel as we speak. Yeah, but chat, I'm super excited, super excited for what's to come. Because I feel like this year we've had an amazing year for also education. You know, it's been an incredible year for education in terms of like really highlighting the power of TFX concepts, what's possible, and the repetitive nature of the market. So I think, man, this has been like a really eye-opening, or it should have been a really eye-opening year for how entries work so well with gold, because man, it's like we're doing the same thing, but instead of 10 pips, it's 20 pips. Instead of like 20 pips, it's like 30 pips or even more, 40 pips. So it's just insane. It's honestly insane. You know what I still feel FOMO about is we missed so much on the Trump election. You know, because the stop losses were too big during the presidential elections. The stop losses were too big on the gold sells. We missed so many opportunities. But that's never going to happen again because we've adapted. Still the same entry models, but we became a little bit more lenient on the stop loss. Because like before 2020, 2024, 2023, 2022, 2021, for the most part, you could be very stringent on your stop loss. You could say something like, 10 pips, 16 pips. But as the years unfolding, you're seeing like a lot more volume coming into the market. So it's a lot more difficult to be stringent on your rules. So you have to adapt that stop loss a bit more. So that's what we've been doing. And I think like ever since we made that adaptation, man, it's been an amazing year in terms of at least getting stuck in. Getting stuck into the positions. Because, man, if I was going to be very stringent on my rules, then I couldn't use tight stop losses. Even nowadays, when I use my 16 pip stop losses, I have to accept the fact that that stop loss, it can't be on a structure. Sometimes there's just no structure. If you got a 16 pip stop loss, man, a 1 minute candle is just, it's not going to give you enough structure to create necessarily always like that support before it breaks or that resistance before it sells. So like just small adaptations like that. You see, for example, like right here, still use a 16 pip stop loss, but if you put a structure, then your stop loss is about like 55 pips. There's a lot of volume. So I think like an amazing year for really highlighting how adaptive that your approach is in the market. Because what happened was in the beginning, when that volume started to kick in, I noticed a lot of people were complaining about this, that they couldn't get any trades because the markets have kind of changed. Correct? I saw a lot on social media about that. Stops are too big, moves are too volatile. But when I was looking at that, I say, thank God that he gave me a vision of objectivity, or at least for me to play the devil's advocate and not be afraid to adapt. Because I think like a lot of people are afraid to adapt because they're afraid to touch something that they think they shouldn't touch. But yeah, you gotta be able to make those changes when you need to make those changes. So if you're currently facing any issues like that, don't be afraid to adapt. Just make that small tweak you need to make, but don't change the system. Keep the foundation solid, the theory solid, but just make that little tweak that you need to make that's making you miss moves, right? If you find yourself missing a lot of moves. Perfect rejection off my resistance. We should be heading to 40.29. Yeah, you see, like literally the market's giving you money. Like it's literally paying people out here. Like nice little 43 pip move and then back into the range. See, a little accumulation. Look what happened here. Remember we just drew this. Let's see if it actually pays out. What happens if that going to be a liquidity grab? But it's giving nice push, very nice push. Just back into the gulag. No overall direction. It's like 506. So we got about a basically roughly just about like 50. What was that? 54, 50 minutes, 55 minutes, let's say. Till the new hourly open. That's going to be pre-NY. Oh, yeah, that looks brutal. It did the double whammy over here. You see, you got one grab below here. You got another grab above here. Now it's spinning. Cool melt. Yeah, cool melt. I'm not touching it. It's a bit more for me, even though I'm gonna watch the trades play the way they play out, I'm not going to touch the market because it's a bit more random for me than when locking in during a specific time. Whether that's going to be a pre-London time, London Open time, or pre-New York time. Yes, I can see the moves. I can have a trade idea because having a trade idea is not difficult. The more you're on the chart, the more the market shows you trades, correct? So we can sit here all day and I could call out signals left, right, and center, but do you have to take those signals? No, you don't. You don't. You just got to take the signals at the time that you're supposed to take your signal. Because again, it's the casino effect. If you're sitting in the casino the whole day over here, you're going to give back your profits. But if you're going to hit the casino at a certain time, you know, when it gets busy, casino gets a bit busy, maybe, you know, the blackjack tables are looking a little bit more hot. You can choose the table. Like, you gotta walk around the casino. You can see, okay, you know, let me see this cards. Let me see that card. Blah, blah. You're gonna have a much better time. You know, you're gonna hit it like 1 or 2 times a day. A much better time. Man, I remember when I first started going to casinos. When I was still in high school, I used to make fake IDs. Right? And I used to charge the kids from the rich schools like a lot more for the fake IDs. But I used to make fake IDs. And fake IDs got me inside casinos, got a membership in a casino. And every time after school, I would get off the bus, go home, change out my uniform, and then go to the casino. Go to the casino. Guess what? I was the only one at the casino at that time. Those times, like odd days, like during the week, I was like the only one in the casino, maybe like around 3 p.m., 4 p.m. There were not a lot of people. It was just me and the dealer playing blackjack, you know, grab a free beer. And I used to lose a lot of money because I was chasing the money, right? I was chasing the money. I was the only one out there. I was like chasing the money. So I used to lose a lot more during the week, but I would always have awesome days, or like not always, but most of the time I'd have amazing weekends. Amazing weekends, because on the weekends, the casinos are more full. They're more packed. You know, you're going to have better probabilities. But during the week, I was like the only one there, right? And then I would go home, watch some videos on counting cards, watch some tips and tricks, hit it again the next day. Until one day I realized, like, man, it doesn't make sense going to a casino when I'm the only one here. Or like me and my buddy used to go, so it was only me and him. Then it doesn't make sense. It doesn't make sense. It's slow. You know, it's slow. So that's how I approach my trading also nowadays. You see, like, everything's taken out little bits and pieces from your life as well, that you can always reflect back into your journey in trading. For me, that's a little bit of an example. So nowadays, for me, I also look at it a bit of the same way. Because right now, it's kind of quiet. Yes, you could make a few plays. Yes, you could find a table that's nice. But you're much better off just waiting till the weekend. Or in this case, you're much better waiting till the time that you're supposed to trade. For me, pre-London, London Open, pre-NY. Boom. That's it. The rest of it is just loitering. You're just loitering around. Yes, buyer exhaustion again. And this can be a good push down from the 1 minute. It broke that 1 minute low. It's funny, I bet some buyers are trapped there on the candle break. Yeah, some buyers with big stop losses still waiting on this to play out. They just face a bit of drawdown over here. But the good thing is they got like a really big stop loss. They're in a good position to manage their risk too, because they can move this from here to here. Because it shouldn't re-break those lows if it wants to go up. And if it does, it's probably going to stuck in this range. So it's giving them some kind of a structure over there. So a small little liquidity grab situation here. There's no reason to be super aggressive on the buys on gold too. As to say, to leave this open. Because there are times in the market, like let's say when there's macro fundamentals at play, like you can be more aggressive. Like even if price comes and gives you drawdown, blah, 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 you can be more aggressive, chat. Like we've experienced these market conditions before. Like if there's some kind of macro event, like overall driving the price of gold, you can just leave it and let it hit your stop loss because you know there's a certain preferred direction based off of the macro fundamentals. But on a day like this, there's no reason to be aggressive on gold buys. So if anyone has like massive stop loss here, they can reduce it. They already got their structure to reduce it here. But you see, they're all manual different traders. You got the scalpers in and out right over here. You got the ones with the bigger stop losses currently still in play right now. Do you stay streaming for NY session? No. No, sir. Big parents watching stream right now, hearing about his crimes. My parents knew. They gave me the money for it. I used to ask my mom for money. Like, Mom, can I get some money? Go in a casino. You know, my mom is Belarusian. The casino was owned by Russians. So she had also like some clients over there. Hey, but man, like when you're young and looking for ways to make money, you don't have a lot of options, right? I mean, getting a job was not something that I ever wanted to do. So for me, it was like making money casino or like selling stuff in school. Or like giving some kind of a class outside of school. So I've always been wanting to make money myself. I've never liked the idea of making money from a job. I love that feeling of making money yourself. It's a different feeling. Fancy showing up the new setup then? Oh, would have taken this one. Funny, I bet some buyers. Look at the sell in the 1 minute. What you do this Christmas? No idea. I don't even know what I'm gonna do tomorrow. I don't think about the vacations. You go on vacation. Don't tell me to go on vacation. There's like, what's that lyric from Drake? Drake, you go on vacation. Let me see if I can find it. What song was that again? Where it's like, oh, you go on vacation. Don't ask me about relaxing. Not sure if you know, but I'm actually Michael Jackson. Yeah, I think, you know, like when you're working hard and, you know, when you're making money, you don't want to go on vacation. Why go on vacation when you can make money? Some people, that doesn't sound quite nice. I understand how that might sound to you, but, you know, to each their own. For me, making money is my, it is my purpose. For me, I find it's more of my purpose in life. It's the reason why I don't have children. It's the reason I don't have long-term relationships. It's because for me, it's mostly important to make money. If I was going to have a relationship, my partner would have to be okay with the fact that I would need space and time to really push my limits. So I think to each their own. Some people like the family setting, and that's totally fine. Nothing against that. For me, this is what I do, and this is all I've known. And like ever since I was a child, that's all that I've ever wanted to do. And that's all I think about 24/7. So when it comes to vacation, I find it very difficult to relax on vacation. Counting candles. Yeah, this thing is stuck. This thing is stuck, man. It's not going anywhere. Look at the wicks getting like a lot of build up here as well. Loads of wicks getting built. Da, 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 da. Wonder if this is gonna block the view. Let's see. Side here. I'll keep that on the side. I want to see if I can put the camera again on Discord. Let's see how this thing works. Real fight on top. It's funny to see because so many mixed signals. Asian high swept. Are these the Asia highs? Oh yeah, we did reflip on the daily though. Asia high has not yet been swept. Asia highs are by 40.54 over there. I think if you make a lot of money, do you have to take some rest also? Rest is for the weak. There's no rest for me in this life. Perhaps in the other. Peaky Blinders. Perhaps in the other. Yeah, this thing is nasty. Holy. I mean, it's a difference, right? It's a difference. If you're going to chase money, then you know what you're doing, right? You're not doing it and then looking back at your life and saying, oh man, I wish I did this. I wish I did that. Don't play the victim. Know what you're doing and accept that. Man, if you look at a lot of politicians, they give their whole lives to politics, you know, to die at an old age and never having spent all the money that they stole. Because all that they did was just like love the game of politics. That's all that they did. Right? So towards the end, they're going to die a happy life because, you know, that's what they wanted to do. So I think you just have to be very sure and never play the victim about the decisions that you make in life. So just be happy with it, you know. I can look back at the time that I missed out, that I could be having children and a family and, you know, still look back at that and say I still made the right decision. You never want to be a victim. Never play the victim. Make choices in life, just like Han said in Fast and Furious, and don't look back. Life's all about choices. You make them and you don't look back. Some goat shit here. That's some goat shit PA. Real fight on top is funny to see because so many mixed signals, all sellers absorb, then buyers right after stay away zone. Or you can send a chart in. Send a chart in to the Discord. Let's see if you got a trade today. If somebody took a trade today and you're new to the stream, if you took a trade today and this is your first time on stream, you get in the habit of journaling a trade, especially if you're still learning to trade. If you still have a system that you're working on, still trying to make it better, get in the habit of making a simple journal of that trade that you took and then send like a label chart into the Discord, because you just might see an angle that you're missing. You just might be missing something that someone's going to point it out to you and you're going to be like, oh, that's interesting. Okay, so maybe this is something I could look at next time, right? And that's one thing I say, like, I wish I did more of when I was still learning to trade, because as I said, I'm a lone wolf most of the time. I was part of communities, but I never really engaged in them as much as I should have. And I think that could have actually helped me if somebody was to point something out like this on stream. And you know, that's the whole idea behind the streams. Is if you got like an idea you want to share, by all means, go ahead. Get into the habit of sharing them. Because I know not all of you can be profitable. There's no way 348 of you are profitable. There's no way. Some of you have been trading for 6 months. Some of you have been trading for like 2 months, 7, 8 months, whatever. There's no way everybody here is profitable. So you definitely can send in some charts. Join Discord. If you don't know what Discord is, you don't know how to use Discord, there's a perfect opportunity to learn how to use Discord. It's a perfect opportunity to learn how to adapt, right? Because this is what trading is. It's not just about being on the charts. It's also about being off the charts, being willing to do certain things off the charts too. Trust me, that's all character development. Like I met a guy yesterday and he said, oh, like, what do you do for a living? I said, day trade. He said he day trades too. And he said he's only been doing it for 6 months. And I kind of joked with him that he's got a lot of character development to go. A lot of character development to do. And it's the truth. When you see somebody who's been trading for 6 months, I've been trading for 6 years. Some of you guys trading for like a year now, and you're talking to your buddies who only have like 1 month in trading. It's a similar thing. You just know there's so much character development to do. So now imagine that perspective. Now, if you're not even profitable, now imagine me telling you that. So it's like you telling your buddy who's been doing for 1 month. So I'm telling you this, like, just trust me, send a chart in. I'm now working on psychology. I need to improve. It's the hardest thing. I'm fighting more. Skills there, but psychology need real work. Yeah, I mean, like, psychology is like everything also. It's a huge portion of it too. Because look at it this way, like somebody can have a skill. Let's say you're playing golf, and this guy's been playing golf for like a few years, and he can hit the ball. He has a skill to hit the ball. You kind of know a bit about hitting the ball and stuff, but let's say on a day that the guy's psychology is not there, or is thinking about something else, but your psychology is there and you feel good, there's a chance you're going to hit the ball better than he hits the ball. Right? So sometimes, you know, psychology can sometimes overrule a lot more than we think. Hi Vic, where are you now, Vic? I realize your time. Oh, it's the same. I live in Wakanda, sir. Have you heard of it? Wakanda. Awesome place. I wish the internet was better though. This is my 20th year for when I opened my live account. Oh, amazing. Amazing. 20th year anniversary. Okay, this volume's dead, just like we expect, you know. Market's still looking for some more buyers over here. Get some more buyers in. Get some direction. 15-minute time frame is forming like it wants to rocket up. Yeah, it's getting it's a what do you call it? It's enticing. It's trying to entice buyers for this moment. You see even last little liquidity grab happen here. Instead of moving down, end up being a liquidity grab to push up, but it's really choppy. You don't want to trade in that environment. It's not as clean cut as when price is just moving clean. Like for example, you see this direction, like you see momentum. Look at this momentum, boom boom boom, little structure, boom boom boom, move, momentum, little structure, boom boom boom, move, you know. But now when price starts to like move like this, timing is of the essence here. You know, you really got to look at your time and say, okay, so I trade gold, but how does gold behave at 5 a.m. Eastern? That 5 a.m. candle is always consolidating. Like, there's a higher probability this 5 a.m. candle here is going to consolidate when we have the London open at 3 a.m. That's what I know. That's all that I know. So when I'm taking my second trade for the day, I'm going to take my second trade from that 6 a.m. candle. That's a pre-New York candle, 2 hours before NY opens, because that's when volume should be opening up. At least most of the it's not perfect, it's not 100%, but given the right amount of sample sizing, for me, that's when volume starts to pick up again. You got pre-London push, boom. Then maybe for an hour, it kind of cools down before London open, boom. And then it cools down. And then you got pre-New York, boom, into New York Open, boom. So don't be a slave to the chart. Don't just trade just because you're on the chart. Really nail the time that you're trading. Like if there's one thing you're going to leave the stream here with today is understand the hourly candles that you're trading. Go on the hourly time frames, especially if you're just scalping the market, and truly understand how those hourly candles move during the time that you're trading. You see this? Look at this size. Look at the size of this hourly candle here. What time does hourly candlestick open up? There's a London open right over here. So truly understand the time that you're trading to get the results that you expect to get. But don't take a trade now expecting a runner or a bumper clot and be disappointed that you're stuck in a range. You know? Ooh, my neck, fuck, didn't crack. Oh, that's the worst feeling. Oh, when you're trying to crack something, then it doesn't crack. Oh. Come on. But I know we've been gone for a minute, guys. We got a lot of catching up to do. We have a lot of consistency to do. A lot of videos to make. I see an old high from 40.55. You think it's best to wait for it to reach the area then sell? 40.55. Yeah, that's what we said was the whatchamacallit, the Asia highs. I think if you think it's gonna go up, how can you catch a move to 40.55 rather than waiting for it to come 40.55? Because what if it doesn't come to 40.55? What if it ranges here for the next 3 hours? Are you still going to be waiting for 40.55? Maybe it comes to 40.55, but like during a time in the day that you don't really want to be looking at the charts. Then what? Then what? You know, because now you're speculating. That's all that you're doing. You're not trading. You're speculating. So if you think it's going to 40.55, rather ask, how can you take a trade to 40.55? It's showing like some kind of a reversal signal though. Trying to break above these highs. While it's breaking the highs, it's accumulating orders. Accumulating orders, looking for a potential sell. Because it's struggling. You know, it's like creating a new higher high. But you see here it's forming that head and shoulders. Left shoulder, head, right shoulder. It broke, creating a new higher high, but it's struggling. It's struggling. You know, price doesn't behave like this when it's moving with conviction. It doesn't behave like this at key levels of resistance. So this is looking like it could roll over. You could get that roll over. Can I pet that dog? Can I pet that dog? Wait, is there like how do you do the gifts on here? Can I pet that dog? Oh yeah, it actually does have them. It's like what is this, like a bear? Can I pet that dog? It's a freaking bear. That's what it is right now. Because you wanna pet this dog, which is the market. So this is you, and then this is me pulling you back. I'm pulling you back and saying, don't pet that dog. That's not a dog. That's not a bug. Don't touch that trade. Don't touch this. Don't touch this right here. Just wait. Wait for it to go away. Wait for it to go away, then we can go outside. Because right now this is basically yeah, it's basically nothing. Basically nothing here. Okay, still kind of new to trading, but thanks for the advice. Welcome, Jared. Welcome, sir. Hey, Stephen Harris, thank you for the sub, man. It's accumulating. It's gonna try and break out again later. But the tricky thing psychologically with the first breakout is you're gonna think you missed a trade, but in reality it would have been very difficult to catch that breakout. The better play would be to wait for price to first start moving again, and then try to look for continuation plays or at least even counter trends. But you know that price is moving, right? You're gonna have a better probability. So as of now, if you're gonna be looking for a trade like later on, what I can tell you is this support area here is still pretty valid below like 40.29. It's like 77 pips. So that could play out later, chat. Like remember, 6 a.m. Eastern right now in 30 minutes. It could have a similar effect as what we spoke about like yesterday. Right, yesterday 6 a.m. Eastern here, like price was still gearing up, consolidate for a bit longer. Actually, which is quite insane. Like yesterday pre-NY was trash. Yeah, pre-NY looked like trash yesterday, but it ended up breaking out at NY. So just be a bit cautious about that. I'm not sure about any red folders today. From what I see on Forex Factory, there's nothing. Wage price index. That's literally like the only thing. Like if you're gonna put your yellow folders on, then you got like all these other ones. But these yellow folders, I think they're just gonna create you some analysis paralysis over there. AJC Films, thank you for the sub. I hate to be unoriginal, but I'm taking that idea. Oh, this is from Woods. I got my wife a bear that can record a message to play back when you squeeze it. I had that recorded. Oh, really? Nice. Can I pet that dog? Really? Awesome, man. Yeah, my old girlfriend wouldn't get those kind of jokes, you know? She was not into the whole social media kind of thing. Can I pet that dog? Yeah, Woods is winning, man. Woods got a girlfriend who plays video games. Every guy's dream, I guess. It's like easier, right? It's easier when you want to play, you're gonna play together. There's this funny meme. It's like whenever your girlfriend takes long and you guys are going somewhere, all you gotta do is press the PlayStation button, and when she hears the beep, she's gonna be ready. Because she knows if you get on that console, getting you off that console is gonna be difficult. So if your girlfriend's taking long to like order food or get ready, just press the PlayStation button. It's gonna go like beep. Because it's always like that, isn't it? You're gonna wait for what feels like hours, and when you say, okay, this is taking too long, and the moment you decide to turn on the PlayStation or play one game, apparently we're ready to go now. Yeah, but yeah, chat. Let's just see if there's anything here. Gold sleeps to 1 week low as traders dial back. Not even getting any news. It feels like the market has gone out to lunch. This volume has died out here. I think the market maker went out to lunch now. You need to go grab some Starbucks. Is gonna come back later and review all the other orders over here and say, okay, so you know, people bought this certain amount, people sold this certain amount, and then as he's gonna drink his Starbucks, he's gonna push either a buy or a sell, like Bogdanov. That's why we got Bogdanov here on YouTube. That's kind of like how I romanticize the market sometimes. Like there's just this mysterious guy who's moving the market like a wizard somewhere, and he's gone out to get Starbucks before he makes the market move again. Because what I've realized over the years, man, the market just doesn't move. It doesn't move unless it wants to move. You know, and when it moves, it always seems like a very intentional. You know, it's very intentional about the times that it moves and how it moves. And that's when you want to be jumping in. You don't want to be jumping in here. You're going to get a lot of whips. Do you think gold will try and sweep 38.97? I think like 38, we hit 4K. 38.97. I think if we come down to 38.97 here, then gold has a chance of like potentially losing more value. Because, you know, we got like 3,900. Then you're breaking 3,900 psychological mark. So you see, it's quite an important area. And the thing about the psychological marks is they're not perfect, right? So you're going to see sometimes like price spike through it like this, boom, boom. It's not perfect. It wouldn't always just be like a perfect tap, correct? But think of the psychological marks more of like a zone, right? You see like 3,900. Look at how we respected 3,900 over there. And then look at how we respected 4,000 over here. So think of it more like a zone. See how it spiked through it like this? But it's a 4K. You must remove perfectionism from your mentality when it comes to trading. You're never going to save every penny, and you're never always going to have the perfect entry. It doesn't exist in trading. You trade, you kind of take what you get, and at the end of the day, you either make money or you lose money. Right? So if you're going to lose money, you want to lose less. If you're going to make money, you want to get stuck in. Don't be perfect. I think for anybody who's struggling with that, perfectionism, because I struggle with that quite a lot in the beginning. But when you learn to let go, it's almost a freeing feeling when you start to let go a little bit more. Of course, you're following rules, but you're just not expecting the market to be perfect, right? And when it is perfect, in the instances that it is perfect, you're going to look back at it and say like, man, that was awesome. Because, you know, like sometimes, for example, what tended to happen quite a lot before, it doesn't happen as much nowadays, but this used to happen to us so much. Like price would give us a drawdown because there was less volume in the market during that time, come really close to hitting stop loss, but because we always put our stops at like 16 pips, or I think at the time we were using 16.5, it would usually like come so close and then reject and then just go into profit like this. And then in that sense, then you're like, wow, you know, like my analysis in terms of where to put my stops, even at break-even points, is kind of perfect, right? Like look at today's trade, 20 pips, break-even, stop loss. Look at the other times that we got like break-even trades. Just like when we needed to get break-even, it gives us exactly that amount or close to it. Sometimes like 19.8, 19.5, maybe 19. But that's when you're ideally setting a stop loss to break-even. Then you're like, wow, you know, it's almost like perfect, but it's not. It's good to see it, but don't think of it like you're gonna have control over that. But it's good to see it because you planned for it and it happened. Right? So if I, for example, let's say if I plan a break right here, but the candlestick broke like this and then it pushed up like with a bit more volume, I also like get in right here. Like even if it's like a bit more pips, like that's about 4 pips, maybe even 5 pips, whatever. I also like be getting stuck in because as it was breaking, I'm getting in already. And sometimes you can't be perfect because the broker will break it first. The broker will break it first and FXCM will slightly be lagging behind. So, you know, there's always this type of things that we think about when we trade. But you can't control a broker, you can't control a trading view chart and expect everything to be perfect and the same. You know, oh, the broker doesn't have a wick, you know, but maybe FXCM has a wick. So now you got to ask yourself, do I really need a wick? And who am I going to listen or follow? Am I going to follow trading view wick or am I going to follow broker wick? You know, so oh man, look at this. Look at this over here. Look at the way it's like acting super aggressive. The perfect trade comes from performance. That's what I label as perfection. Yep. I think that's what it is, right? Perfection is just being consistent. The more consistent you are, you're going to have higher chances of like kind of giving that illusion of also perfection is from like putting the work in, right? So then it looks kind of like perfect. As you know, you never miss a lucky day if you show up every day. Got a lot of work to do here, chat. It's only Tuesday though. Still got the whole week ahead of us. Hey, good afternoon. First time here. Could you explain how you trade? What are you looking for? Hey, what's up, Roxy? Welcome. We're just looking for volume-based entries. Trying to put ourselves in situations where we're gonna have price do this. You know, like it's very volume-based oriented. So we want to see big pushes and very minimal drawdown. So if you get like drawdown, then we're gonna look to either pretty much manage the trade. And now how to catch this move here? We catch using TFX concepts. That's how we're gonna catch a move like this. So you're gonna catch a move like this. See right over here. See, we try to catch a move like this, but in this scenario, look what happened. Price gave me like maybe 19-20 pips and then pulled back up. So what did I do? I got out of break even, right? Because it's not what we want to catch, which is this. See this? Zero drawdown. But like even something like this, very nice push. It's just insane 1 minute candle. This 1 minute candle was huge. It's like 40 pips in 1 minute. So that's what we're looking to do. We're looking to put ourselves in a position where you can even maximize your gains and still lose less in the eventuality that price goes against you. And if it doesn't give you your push, guess what? You're still looking to lose less, even if you don't get a chance to put your stop loss to break even. That's how we trade. And then, you know, just gonna wait. It's gonna wait for confirmations here. Anyone catch 600 pips drop yesterday? Yeah, we got Ricardo caught a sell here yesterday. He says, that's an insane move. Like this 5 minute candle here was 228 pips. So from the break of these lows, got about 450. 450 little accumulation break right here. You got resistance. Boom, boom, boom. Let's clean that up. Little accumulation. Nation. It's like what's happening on gold? Market moving sideways. Was this already at the NY open? Oh, that was already in NY even. So that volume came at a very odd hour because you had London close first. London close. This is what we call the dead shift. What is it called? Dead man shift. What's that shift called? Like people don't like to work that shift. The dead shift. It's like the dead shift here. You know, when London closed, it's like the dead shift into like Asia open. But that's where the volume came in. Insane. It's like everybody's off the charts at this time. And then price moved down. Had a small little baby accumulation breakout right here too. See this little baby accumulation. Nice little 8 SMA. Boom, boom. Volume. Zero drawdown. Amazing. Very nice. And then into the London open over here. But you couldn't have caught this because that's the market open. So the spreads and everything would not have allowed you to catch that one. Boom, boom, boom. And yeah, yesterday's move seemed to have been that sell-off. Oh, now price is moving up. See, look, we just need more buyers in here. You see, the guy came back from Starbucks. Look at this.
Why are you running?
The market maker came
Why
back
are
from
you running?
Starbucks, Chad. I'm not lying to you. We just need to organize, you know, orders. People were keying in the orders, everything. So he came back. He sat on his table, put his coffee down, and said, "Okay, do we now have enough looks on the table?" Because, you know, in the beginning, we had this push up here, but it was not enough. So it had to entice more buyers. And then he said, okay, now we have enough. So we can move up a bit more. It's like breaking from this accumulation. But as I said, it's going to be very difficult to catch. In hindsight, it looks good. But you might have like forced some trades here, maybe here as well. But the true breakout seems to have come like right here. But it's more of like a fake out that happened below here. So you got like a fakey below support like this, inverted right here. It's not perfect, but it's there. I think like the entry was a break of these highs to move up with that SMA confluence. Yeah, but as I said, very difficult because if you're giving so many tries, like if you take a sell here and you take a loss, you take a buy here, take a loss. This one didn't break properly. This one was a sell, pull back up. But no, actually, I think that sell is not valid. I don't think that sell looks very clean. Yeah, it doesn't look clean. It doesn't really look clean. Maybe it is clean, but not so clean. I'm talking about this sell here. Because price pushed up. Push up. Boom, boom, boom. We got resistance here. We got a support area here. Let's see how it broke. Yeah, it broke with volume, which is a good start typically. See something like this happen. It's a pretty nice start. How much did it do? Did it do 20 pips? Oh, wow. Look at that, Chad. Look at that. Lo and behold, what have we been talking about here today? 20 pip break even. Come on now. Stop playing with me. It's all, the proof is in the pudding, as they say. The proof is in the pudding, and the pudding is made by the hard work you put in. So no hard work, no pudding. Look at that. 20 pips. 20 pips. Nice little sell off over there. And then price did the buys. I think once you really lock into the concepts and go through the WAP database, like this is gonna become like tying your shoelace basically. Then you're gonna see exactly what we're looking at, because you know we're all looking at the same candles, but it's like we're gonna look at them differently because some of us have like different goggles on. Some of us have like revenge goggles right now. Some of us have fair value gap goggles. So you know you're gonna see what you see. I could get that one if I wanted to trade it. If it was NY, I would take it. But yeah, now it's moving. It's a pre-NY. We're heading into pre-NY now in the next 10 minutes. So you gotta take off. If you got like revenge goggles on right now, you gotta remove those goggles. Or FOMO. Like FOMO. Some people feel FOMO. But don't feel FOMO, because trust me, you never miss a move. I could look back at this week and say I missed so many moves, or last week, but I know you never miss a move. Last week I feel bad because we missed like 2 W's on stream, but you know, it is what it is. I'm done 2 trades, 1 each trade. Happy days. Just move to the next day. Yes, you see, the market's gonna give you opportunities. Most of the time, it's like if it fakes you out, it fakes you out. All right, fine. But if it puts you in profit, at least like, you know, manage your risk. Like, especially because we've been talking about this today, break even. Understanding when to break even is super important. Chat, let me ask you something. When it's on like a full screen like this, this is on YouTube. I want to see if I can get a camera up on Discord. But if it's on a full screen like this, is it better like this, or is it better full screen completely, Like full screen completely like this, or with the corners rounded off? What's better, like full screen? Is it full screen? Yeah, full screen view, or should we round corners? Round borders. Round borders. Someone says completely. All right. Let me put a poll in, because I know some people don't want to type as well. So full screen or borders? Full screen borders. I hope I spelled that right. But it looks like full screen. Oh, they're both shit. Thank you. They're both shit. Hey, that's good feedback. That's good feedback. Now tell me what I can improve. Is it my face? Maybe my face is the problem over here. Maybe you just don't like my face. But anyway, just leave a vote. Yeah, that's a full screen. No comment, no comment. All right, fair enough. You're too close to the camera? Yeah, I think so. I think that might be it too. See? Nice. Very good. It's always good to get it out there. Even when you feel that you're gonna get judged, you have to get it out there. Out into the universe. And then let the universe decide what to do. Now I think I know what I should do. Just like if you send a chart, you're gonna send a chart to Discord, then you're gonna know exactly what you need to do when you get your feedback. Different on mobile devices. That is true. I like the way it looks on the mobile device with the rounded corners. See, one thing about me, chat, is, man, I'm always objective. I'm always objective with myself, with everything that I possibly can be objective. So that's my character, and I think you learn a lot from that. Every time you think you know something, you know, you always gotta think again. Because like in the beginning, what it is like when you're learning trading, right? I think I struggled with a lot was thinking that I knew something other people didn't. Until only to realize later that what I think was just what I thought. It had nothing to do with the actual reality. Just the same way I thought the reason I was not profitable was because I didn't have a big account. Until reality sets in. And you know, reality sets in very subtly, and I think when it does, you feel like a type of humbleness from it, right? And a bit of growth. You also start that growth process, that learning process. That really reflective process of actually now you're trying to get better. But I think I'm gonna end off the stream over here, guys. Like W session, I guess. But yeah, this is it. This is the break. But I'm off the charts now. I'm gonna go and I'm gonna go do something else for a bit. I will see y'all tomorrow. The streams are back live, London session, chat. So yeah, we should have more consistent week this week too. So I will see you all tomorrow, and adios. Enjoy the rest of your day.
No time for this slip, homie, now we bout to dip.